First of all, we would like to warmly welcome all of you to our Vietnam's Economic Pulse 2022, organized by NCIF of MPI in collaboration with UNDP today. Ladies and gentlemen, Vietnam's Economic Pulse is intended to be a regular forum to create a place where we can gather the intelligentsia of managers, policymakers, experts, economic community, business community, and the scholars to discuss in depth regarding economic issues, national development strategies, and to build national consensus in the development process, leaving no one behind. In the forum, we will hear from in-depth research on key issues with the engagement of local and international organizations and experts with a diverse range of perspectives. So it is expected to create a very vibrant policy discussion in order to provide inputs to develop different national economic development targets. The topic of our Vietnam's Economic Pulse 2022 is extending economic recovery, economic drivers. On behalf of the organizer, I'd like to extend to all of you a wish of good health and success. Ladies and gentlemen, I would like to introduce to you, joining our forum today, from NCIF of MPI, we have the Deputy Director of NCIF from MPI, Mr. Đặng Xuân Quang, who will chair the forum today. And Mr. Lương Văn Khôi, Deputy Director of NCIF MPI. From UNDP, we would like to introduce our resident representative in Vietnam, Ms. Ramla Al-Khalidi, the co-chair of the forum today. Also, we are very honored to have in these forums our senior economic experts, representatives from relevant ministries, agencies, including MPI, MOIT, MOST, MOF, SPV, international organizations, including IMF, ADB, UNCAS Vietnam, and representatives from research institutes and universities, including NEU, FTU, and also VNU, the Finance Academy, Banking Academy, and US embassies, German embassies, Irish embassies, Japanese embassies, and Norwegian embassies, business associations, including for garment and textile electronics, FDI, SME, and we also have corporations and groups, including Fin Group, BIDV, Garment 10, Mai Mui, and some other corporations, representatives of the mass media as well. Ladies and gentlemen, to start the agenda, I'd like to invite to the stage Mr. Đặng Xuân Quang, the Executive Deputy Director of NCIF MPI, to deliver his opening remark. Good morning, ladies and gentlemen. First of all, please allow me to inform you that, well, the forum today was supposed to have the chairing of Deputy Minister of MPI, Mr. Trần Quốc Phương. However, due to an emergent business, Vice Minister Trần Quốc Phương could not join us today. So, as assigned by MPI's leadership team, well, today, acting on behalf of my seniors to chair this event. So first of all, Ms. Ramla Al-Khalidi, resident representative of UNDP Vietnam, representatives of ministries, agencies, distinguished guests, colleagues. First of all, on behalf of the Ministry of Planning and Investment, I would like to warmly welcome representatives of ministries, agencies, policy makers, and representatives of international organizations, research institutes, the mass media to join us here in our Vietnam's Economic Pulse 2022, Extending Economic Recovery, Economic Drivers, jointly organized by NCIF, MPI, and UNDP. As you may have known, since the beginning of 2022, the global and regional economic and geopolitical situations have experienced unprecedented changes with significant uncertainties. The war between Russia and Ukraine has no signs of stopping, with rising inflation and monetary policy tightening, and also countries are experiencing difficulty to address the drastic impacts of COVID-19. There has been a slowed growth of the global economy, and there are also economic and food insecurities that affect all aspects of the Vietnam economy. However, there have been signs, promising signs, and impressive breakthrough. And GDP growth for Q3 2022 is estimated at 13.67%, bringing the annual growth to over 7%, and inflation basically has stayed under control at the 4% range. Regardless of the many positive achievements and the evaluation that we have received to be an economy of resiliency. However, in Q4, there have been significant risks that may affect the short-term, medium-term, and longer-term future. And also, we are suffering from interest rate and exchange rate pressure, causing instability in the capital and security market, leading to the situation of slowed and shortage of orders for enterprises, leading to situation of lacking liquidity as well. And in the coming years, these challenges may still remain and may be barriers for us to achieve the GDP growth target of 6 to 7% as set out by the National Assembly. And that is why in today's forum, we are going to discuss these issues and solutions. Ladies and gentlemen, distinguished guests, for today, we have the presence of our experts and managers from SBV, MOF, MOIT, MOLISA, international organizations, embassies, and experts from different research institutes and universities as well. The topic of today, extending economic recovery and economic drivers. Well, for the short term, medium term, and also to achieve high growth in the longer term. These are the issues that I believe all of us here are also very interested in. So in the forum today, I'd like to request that we focus on discussing the two important following issues. First of all, between now and the end of 2022, especially on to 2023, we should look into the opportunities and risks of the Vietnam economy, the internal risks, and also the risks posed by the external economic and geopolitical conditions, what opportunities and challenges they will bring, what are the economic drivers for the Vietnam economy to recover and grow fast. Secondly, how will the short-term challenges affect the medium-term issues, including capital market, labor market, productivity, growth, and what are the policy options and choices for the short-term, medium-term, and long-term. And given the inputs contributed by you yourself in the forum, we from the MPI will be receptive of those, and we will look into policy solutions to promote economic recovery and growth in the coming time. So given that, I would like to declare the opening of Vietnam's Economic Pulse 2022, extending economic recovery and economic drivers. I wish all of you good health, success, and our forum a great success. Thank you very much. Thank you very much, Mr. Đặng Xuân Quang. Next, I would like to invite to the stage Ms. Roma Al-Khaladi, resident representative of UNDP Vietnam, to deliver her opening remark.
Mr. Đặng Xuân Quang,
ông Đặng Xuân Quang, Phó Giám đốc Trung tâm Thông tin Nghiên cứu và Dự báo Bộ Kế hoạch Đầu tư, kính thưa đại diện từ các bộ ngành, kính thưa đại diện từ các tổ chức nghiên cứu, đại diện của khu vực tư nhân, kính thưa các quý vị đồng nghiệp từ các cơ quan của Liên Hợp Quốc, kính thưa các quý vị đại diện các đối tác phát triển quốc tế,
It's an honor to welcome you to the second Viet Nam Economic Pulse on the topic of sustaining recovery from COVID-19 and the prospects for growth in 2023. A year ago, UNDP and the Ministry of Planning and Investment launched the first VEP, or the Economic Pulse, to create a new channel to engage government officials, academia, the business community and civil society in debates concerning economic affairs and socio-economic development policy. As the economy grows and becomes more complex, it helps to widen the discussion beyond government and development partners to bring in diverse perspectives of business leaders and scholars on key development issues. The Economic Pulse was envisaged as an informal forum at which participants with varied backgrounds, interests and expertise could exchange views and insights in open, relaxed discussions. Our aim was to focus less on the protocol and more on the substance of the issues to help bring some clarity to the complex economic challenges facing businesses, communities and the country as a whole. Today's forum is the second in the series and focuses on factors contributing to the economic recovery from COVID-19 and policies to sustain the recovery in 2023.
Ta sẽ tập trung vào những
Since the
vấn đề để
time
thúc
of
đẩy
our
cuộc
last
kinh tế sau đại dịch
forum,
Covid-19 và
economic
những chính sách để
conditions
duy
have
trì tiếp tục phục hồi vào năm 2023. Và từ diễn đàn lần trước cho tới nay thì các điều kiện kinh tế đã cải thiện đáng kể và có điều này là nhờ chính sách cũng như là những cái chương trình về tiêm chủng Covid-19 toàn dân cũng như là phương án chính sách linh hoạt. Nền kinh tế nội địa của chúng ta đã phục hồi mạnh mẽ từ quý cuối cùng của năm 2021 và mức tổng tiêu dùng
and that domestic consumption can once again propel economic growth. Exports are growing and the return of international tourism has helped restart the important
phục hồi tăng trưởng kinh
hospitality
tế
and transport sectors
và ngoài ra thì ngành xuất khẩu của chúng ta cũng đang tăng trưởng mạnh và chúng ta cũng đã thu hút trở lại khách du lịch quốc tế và đặc biệt là cũng đã khởi động lại ngành du lịch khách sạn và ngành giao thông vận tải. Tuy nhiên chúng ta thấy là những rủi ro
economic slowdown in China, rising international interest rates, a strengthening dollar and the growing risk of recession in Europe could affect demand for Vietnam's exports
toàn cầu đang
and
gia tăng
increase
cũng như
the
là
risks
đồng đô
of
đang tăng mạnh
macroeconomic
cũng
instability.
như là ở châu Âu thì đang có rủi ro về suy
Policymakers
thoái
will
kinh
need to
tế.
remain
Tất cả những yếu tố này đều ảnh hưởng
adjusting
đến
fiscal and
ngành xuất khẩu
monetary
của Việt
policy
Nam
in a
cũng
timely
như làm
manner
gia tăng
as
sự bất
global
ổn
conditions evolve.
về kinh tế vĩ mô.
There
Do
are
đó
also
thì
domestic
các nhà
risks,
hoạch định chính sách
especially
sẽ
in the
cần
banking
phải
and
chú ý
bond
sát
markets,
sao đến điều
which
kiện
are
bên
sensitive to rapidly changing conditions in the property sector. In addition, the negative impact of climate change will increasingly weigh on agricultural production and on the health and well-being of communities affected by sea level rise, flooding, drought, and high-intensive storms.
khu vực bất động sản. Và ngoài ra chúng ta còn có tác động tiêu cực từ biến đổi khí hậu và ảnh hưởng đến sản xuất nông nghiệp cũng như là sức khỏe của nền kinh tế và cộng đồng. Và do đó thì ngày hôm nay chúng tôi hy vọng là sẽ có nhiều phần trình bày và thảo luận mang tính xây dựng để nhằm làm sáng tỏ một
along with realizing the sustainable development goals and leaving no one behind. In closing, I'd like to thank the MPI leaders, NCIF senior management.
Và để kết lại thì tôi cũng xin được trân trọng cảm ơn lãnh đạo của Bộ Kế hoạch và Đầu tư, lãnh đạo của Trung tâm Thông tin và Dự báo, các quý vị diễn giả và tất cả các quý vị tham gia ngày hôm nay. Hy vọng chúng ta sẽ có phần thảo luận mang tính xây dựng và hiệu quả. Và xin chúc tất cả các quý vị chúng ta có sức khỏe, hạnh phúc và thành công. Xin trân trọng cảm ơn. of IMF in Vietnam and Laos. The second one is a presentation on Vietnam's economic outlook update delivered by Dr. Trần Toàn Thắng, the lead researcher in our research group at NCIF MPI. Following these two presentations on the global and Vietnam economy, we will hear from two other presentations. The first one is a presentation by Dr. Jonathan Pinkhurst, senior economist from UNDP Vietnam, with the topic of exports still matter. And finally, we will hear from a presentation on assessment of corporate bonds market risks and implications for short to medium-term growth, delivered by Mr. Nguyễn Quang Thuân, CEO of Vingroup. So first of all, I'd like to invite to the stage Mr. François Penchaud, Resident Representative of IMF for Vietnam and Laos, to deliver your presentation on global economic outlook, sailing against the headwinds. So Mr. François Penchaud is one of the experts on debt sustainability and labor markets and banking finance in emerging markets. He assumed the position of resident representative for IMF Vietnam and Laos since June 2019. The stage is yours, Mr. François Penchaud.
Thank you. Thank you all. Good morning. Dear colleagues and friends, it's a pleasure to be here to talk about the global economic developments and the outlook and policy recommendations for Vietnam.
Cũng như là triển vọng và khuyến nghị chính sách cho Việt Nam. Phần trình bày của tôi sáng ngày hôm nay thì bao gồm có 3 phần. Trước hết thì tôi sẽ trình bày về những cơn gió nghịch toàn cầu và trong cái triển vọng kinh tế thế giới mới đây thì chúng ta cũng đã có
economic outlook, both available on the IMF website. The second will be to go through rapidly the policy response in the region.
Và hiện nay thì chúng ta thấy có nhiều cái biến đổi về ứng phó chính sách ở trong khu vực, và cái phần 3 của bài trình bày của tôi sẽ là tập trung vào Việt Nam.
Okay, let me continue. There are three headwinds shaping the outlook. The first one is global financial conditions are tightening. The second one is the impact of the conflict between Russia and Ukraine.
Và thứ hai là tác động từ chiến sự đang gia tăng tại Ukraine và Nga. Và thứ ba là chúng ta có sự chững lại của.
So let's start with the first headwind. I'll show you the slides later.
Được trình bày slide cho các quý vị, có lẽ là nhờ đội kỹ thuật giúp một chút. Như chúng ta đã biết thì Fed đã tăng mạnh lãi suất và thắt chặt chính sách tiền tệ của Mỹ do lạm phát ở Mỹ hiện đang ở mức cao. Và mới đây thì chúng ta thấy ở trên cái biểu đồ ở màn hình bên tay trái thì chúng ta thấy là những cái điểm lãi suất này vẫn ở mức cao, và ở cái biểu đồ bên giữa thì chúng ta thấy là cái đường biểu đồ đã có sự tăng tiến lên phía trên và dự kiến là trong năm tới.
And then on the right-hand side, you have ECB policy rates increasing as well. Okay, the global financial tightening has translated into tighter financial conditions for Asia. Sovereign yields have risen across the region, but remain around historical averages in emerging Asia. That's on the left-hand chart. Capital outflows from emerging Asia have been as large as in the past stress episodes, including the taper tantrum and the onset of COVID-19. However, significant capital outflows have remained limited to a few economies, and we haven't seen general pressure on capital accounts so far. The second headwind is the conflict between Russia and Ukraine, and then the main impact on Asia has been through commodity prices, commodity markets. Commodity prices spiked initially, but most have reverted. Most, but not all, countries in Asia have seen a deterioration in their terms of trade. And that has been an important factor behind currency depreciation so far this year. And that you see on the middle chart, especially on this one. As the war drags on, recession risks in the US and Europe are increasing, and we're seeing signs of softening demand for Asia's manufacturing exports.
Sorry.
No, I can't. The third headwind is the sharp and uncharacteristic slowdown in China.
Cái này vẫn không chạy đâu.
We have marked down growth for China to 3.2%, and it is the second lowest since 1977. This reflects the impact of COVID-19 or zero COVID-19 policy on mobility, but also the crisis in the real estate sector. And this slowdown is estimated to have important spillovers to the rest of Asia through trade, tourism, and financial links, as you can see on the right-hand chart. So what does it mean in terms of the growth outlook? Well, the headwinds are contributing to a marked slowdown in economic activity, including in Asia and Pacific, but the region continues to perform better than the rest of the world. Compare with the April WEO forecast for growth in Asia Pacific are being downgraded by about 0.9 percentage point in 2022 and by about 0.8 percentage point in 2023. Now, inflation. While economic activity is slowing down, inflation has been rising across Asia, but not as much as elsewhere. Our forecast incorporates a significant upward revision to inflation in Asia, but sees inflation peaking in the region in late 2022, early 2023, and generally falling back within central bank target ranges by the end of 2023. The risks to the outlook are to the downside and involve the intensification of the three headwinds I mentioned earlier. We present a downside scenario in our regional economic outlook that involves a deeper slowdown in China, a global recession, and a further tightening of financial conditions. And that you can see the impact on the right-hand chart. Our modeling finds that such a shock would take an additional 1 percentage point out of growth in the region on average, and maybe about 2 percentage points for Vietnam. Now, with all of these uncertainties, Asian authorities are setting policy under a very difficult environment, and there are difficult trade-offs to be made among supporting growth, lowering inflation, and managing financial stability. I'll now turn to our policy advice for the region. As you can see, monetary policy and fiscal policies are normalizing together in most countries. That's on the left-hand chart. With monetary policy responses varying according to remaining slack in the economy and pressures on core inflation. Core inflation now exceeds central bank targets in most Asian economies, and central banks will need to persevere with their policy tightening until inflation durably falls back to target. As you know, rate hikes have begun across the region and are expected to rise further in the next year, with markets expecting inflation to return to central bank targets by 2024. This is despite an expectation that real policy rates will remain negative for much of 2023. And of course, this is in contrast to what we expect to happen in the United States, where real rates are expected to remain positive. There is a risk, though, that core inflation turns out to be more persistent than we expect in our baseline. Historically, our estimations find that inflation in Asia has tended to be quite persistent, particularly in emerging economies, that's on the left-hand chart, and that core inflation responds strongly to external shocks to non-core prices such as shipping costs, crude oil, and food prices. And this suggests the presence of strong second-round effects. The policy implication is that core inflation must be closely monitored, and monetary policy would need to be tightened further if it turns out that core inflation is more persistent. As you also know, the US dollar has strengthened against most major currencies as the Federal Reserve has been tightening monetary policy. Most Asian emerging market currencies have lost around 10% of their values against the dollar this year, while the yen has depreciated by about 20%. The interest rate differential explains a good part of the variation in exchange rate movements this year, and that's on the middle chart. These recent depreciations have started passing through to inflation across the region, and our estimations suggest that exchange rate pass-through could rise as the level of inflation increases. And that would be on the right-hand chart. Amid the external pressure, Asian central banks have been using reserves, the reserve buffers, and withholdings falling by about 10% in many of the emerging economies so far this year. And while buffers have remained broadly adequate for most countries, pressure from interest rate differentials is expected to continue through 2023. FX market volatility has indeed increased in some cases, but indicators of liquidity do not suggest widespread dysfunction for now. And so there's a case to be made then that central banks should have a judicious use of their FX reserves and keep their powder dry in the case that shocks happen later, because there's no dysfunction in FX markets. I'll skip over fiscal policy, just to say that a lot of countries in Asia will need to tighten fiscal policy because debt has increased quite a bit during the last few years, few decades. This is not the case in Vietnam. Financial vulnerabilities, high leverage, rising interest rates, lower growth, and depreciating currencies have led to an increase in financial vulnerabilities. There's an increasing share of corporate debt in vulnerable firms, and borrowing costs for high-yield corporates have risen substantially on the left and middle chart. And on the other hand, surging real estate prices in many of Asia's advanced economies have shown signs of cooling down in the past few months, which is a good thing. And it's on the right-hand side. Now, Vietnam. Let's look at the recent development rapidly. Okay. As you know, the timely, this is working. Is it working? Yeah. Good. As you know, the timely lifting of COVID-19 restrictions, still robust external demand earlier this year, strong credit growth, and the rollout of the fiscal package by the authorities facilitated a robust rebound in manufacturing and retail and tourism sectors. Consumption continued to strengthen, partly reflecting pent-up demand and a strong rebound in the labor market. Through September, the government has registered a large budget surplus of about 3.6% of GDP, driven by robust revenues and subdued expenses, especially capital expenditures. More recently, there's tentative signs of economic slowdown. Growth in industrial production is slowing down, exports and imports are slowing down too, and orders are. This is consistent with the gradual impact of the deteriorating external environment. Inflation was subdued through early 2022, reflecting a still weak economy earlier this year, relatively stable exchange rate, subdued food inflation, capped administered prices, and environmental taxes and oil import tariffs reductions. However, core inflation has picked up, as you can see on the right-hand chart, and has picked up significantly. As you know, the Vietnamese dong has come under pressure. So far this year, the market rate has depreciated by 8 or 9%, which is broadly in line with emerging market economies in Asia. The SBV intervened initially to manage the depreciation, spending FX reserves to support the VND, which is also consistent with the actions of many other central banks in the region. Given the persistent exchange rate pressures, the SBV has appropriately further increased exchange rate flexibility by widening the exchange rate band to plus minus 5%. Market interest rates have risen rapidly, reflecting the increase in the SBV policy rates to contain inflation and support the VND. The sale of FX reserves, which reduced domestic liquidity, tensions in the banking system, spurred by difficulties at SCB, a few cases of real estate corporate bond issuance violations, coupling with newly adopted regulations to strengthen transparency and investor protection in the corporate bond market, have impacted issuance activity and created market uncertainty, adding further upward pressure to interest rates. Let me say that the SBV has acted promptly to calm markets and prevent contagion by placing the SCB under special control, but liquidity pressures could re-emerge, especially for smaller and weaker banks. what do we have as a forecast now? Well, given the robust growth in the first 3 quarters of the year, we revised our forecast for 2022 growth to 7.5%. And in fact, we can't rule out even stronger growth rate for 2022, making Vietnam one of the best performing countries in the region. However, given the slowdown in external demand and tighter financial conditions, we revised 2023 growth down to about 5.8%, but that still contrasts with more dimming prospects elsewhere and would be one of the fastest growing growth rate in the region. Inflation is expected to edge up before gradually returning to 4%. Risks to the outlook are mainly on the downside for growth and upside for inflation. Most of the risks are external, but let me add 2 domestic ones. The first one is the persistence of inflation, which could lead to tighter financial conditions or tighter monetary policy in Vietnam. And the second one, the second domestic one, would be a deterioration in banks' asset quality. In terms of policy recommendation, and this is the last slide. Listen, it's a tough year to be a policymaker this year. In response to these challenges, policy needs to be carefully calibrated, coordinated, and communicated to manage downside risks and alleviate policy trade-offs, especially the trade-off between growth and inflation. In the current context, from our point of view, monetary policy should focus squarely on inflation, and a tighter monetary policy stance should be considered if inflation pressures intensify. Safeguarding financial stability remains a priority, and while bank asset quality has improved since the end of 2020, increased downside risk to growth, higher inflation, higher interest rates, tighter bank liquidity conditions warrant close monitoring of financial stability risks. Fiscal policy should remain flexible and be more targeted if inflationary pressures emerge. And the last point is continue with structural reforms. There's plenty of need for this in Vietnam, including leveling the playing field, reducing skills mismatches, and addressing economic dualism among sectors, firms, and workers. And this is costless. There's no fiscal cost to structural reforms, and it'll help support growth over the medium term. Thank you.
Thank you very much, Mr. Francois. So I think you have really provided us with a sobering reminder that the global economic outlook is not very positive, and that will continue to have financial risks and macroeconomic risks to all of the economies in Asia, and also to Vietnam. To hear more about the economic outlook in Vietnam, I'd like to invite Dr. Chan Tuan Tang, National Center for Socioeconomic Information and Forecasting at MPI, who will present the Vietnam Economic Outlook 2022. Please, Ms. Dr. Tang.
and Q4 of 2022 will still be the same as Q4 2021 or in the previous Q4s or even a little lower, then we may still manage to have about 8% GDP growth for the entire year of 2022. The main contributing factor to economic growth comes from different sectors, including industry and services. So they are the two main drivers of our GDP growth. And actually, if we compare these growth figures with the growth figures of the previous quarters, for example, back in 2019 or 2020, well, back then we did some calculations for comparing the absolute values. And we've seen that over the 2 years of COVID-19, so for 2020, 2021, and even until now, we have lost about 1 year's worth of growth. So the growth rate of the later stages, let me see. So for 2023 relative to 2020, it's about 6.8%. And it is about 1 year of average growth rate for the period of 2016 to 2019. We've included also an additional figure here on potential growth to describe the longer term story of growth. So clearly we can see that the potential growth of Vietnam during COVID-19 was significantly affected. So before COVID-19, our potential growth line was about 7 to 7.5% per year. However, from COVID years until now, it has been brought down to about 5%. So potential growth rate has declined significantly. And regarding the trends for the later quarters, it has the growth rate has picked up a little bit, but we haven't got enough time to confirm whether that recovery is on the longer term or just in the immediate term. Looking at capital growth, productivity growth, labor growth, etc., they still face significant challenges. Looking at capital growth, we can see that the total investment of Vietnam at the moment, relative to the pre-COVID-19, as you can see on the red lines here, it has changed significantly to much higher levels. And the private sector growth has risen above the pre-COVID level. And there is no certainty yet about what the later years may hold. Secondly, I would like to share with you regarding the contributions from different sectors to our growth figures. So manufacturing contributes about 2.5 percentage points in the first 9 months growth rate. While comparing to the first 9 months of 2021, the manufacturing sectors are still contributing significantly to our recovery process. For the services industry, well, we may think that they are experiencing very fast growth with significant contribution, but if we look into the breakdowns, only a few sub in services industry are recovering well and contributing to the recovery, including retailing, wholesaling, well, transport or hospitality, tourism. So they are those sub-industries as the drivers to recovery up until September of 2022. The next point I want to mention here is recovery by the agriculture and industry sectors. While speaking of agricultural recovery, if we look to the left-hand side in the orange and blue bars, we can see that there is some contribution from price impact and real growth as well. While agricultural growth, recently we can see that the outputs or produce prices have suffered from negative impacts. And in the lower charts, you can see the impacts of escalated prices for agricultural inputs. Or in other words, farmers are suffering significantly due to the increased input price and the decreased output price, and that affects the profit earned by farmers. Regarding industries, there are three very different recovery trends. The first one, as you can see on the right-hand side chart, the right quadrant, Well, if we look at the industrial growth index on the horizontal axis, and also we can see that for the industries achieving high positive growth of 2021, they can still sustain that into 2022. And even there are certain industries that can achieve very high growth in 2022. However, they may achieve a superior growth rate of 2022. These are illustrated by all of those lying below the 45-degree line. And there are certain industries that may have experienced very good growth back in 2021, but they face important issues in 2022. For example, plastic production, rubber, and medical equipment manufacturing industries. We have looked into these industries to realize that Chinese zero COVID is an important factor explaining why recovery for the rubber industry is very difficult because they cannot export. And there are a few other industries with very fast recovery. They may have experienced negative growth back in 2021, but very quickly they experienced positive growth in 2022. These include beverage, electrical appliances, or transport equipment industries. So they are the key trends of our industries. Now, looking at the services industry, we can see that there is a recovery sign. We can see from the red line in this chart, we have the total retail sales of goods and services. Well, back in August and September 2021, we had significant negative growth of up to negative 30-something%. But up until Q3 2022, we have got very good recovery at much higher rate on the opposite side. And well, if we subtract the negative growth on the very low baseline, we can still have plus 10% positive growth compared to the pre-COVID line. So we have contribution of about 6 to 7% to overall economic growth. Look at the right-hand side figures. We can see that tourism and hospitality and the transport service industry have double-digit growth, and maybe they have even double growth. And regarding investment recovery, I want to point out to the significant recovery of private investment, and this is reflected by the number of newly established enterprises or those who have returned to doing businesses. This is especially the case with services industry. Speaking of foreign investments, there are a few points to note. For example, new investment may decline, but we have expanded investment of the existing enterprises, leading to significant increase in total investment compared to pre-COVID periods. While looking at a few other figures, regarding export, there is a quite important point that I would like to highlight. So our export recently increased by about 17 to 18% in the first 9 months. If we break this down to volume and price growth, well, we can see that a major part of export growth is attributed to the increase in the prices of exports against export volume, and that contributes about 50% to our total export growth. That explains why we have experienced a significant export growth in the overall context of declining global trade. While looking at those specific industries, we can see a much clearer trend. For example, electronics on the right-hand side graph. On the right-hand side section of the graph, we can see that the price effect accounts for about 8.84% of overall growth. And looking at garment, and we can looking at the footwear sector as well, and also the steel industry. The steel industry suffered from rapidly declining prices. And now let me talk about emerging issues. So in the first presentation, we have heard a lot about the stories of interest rates, inflation, and exchange rates. Well, we will discuss further on these issues in the upcoming sessions. However, there are a few points here that I would like to emphasize further. Well, speaking of inflation, maybe the increasing trend will will persist. And we have talked about the price of imports, parts and equipment, etc., relative to the output prices. And there has been a transmission or contagion effect from the imported input price to the output price. It may take 2 to 3 quarters for this to materialize, and it will affect inflation in the coming time. Speaking of inflation, now it's still rather low. However, there is no guarantee that it will not be as low in Q3 or Q4. Speaking of food prices, there may be certain impacts, and well, another reason explaining why we still have rather low inflation is the low price supply from China, and also we are trying to maintain or intervene in our exchange rate to control inflation. However, the exchange rate towards the final months of the year have been revised, and that may be another reason leading to increased inflation in the coming time. Okay, so now I'd like to talk about pressure on exchange rate and interest rate. And I have included 2 final points here, but actually they have been causing headaches to the monetary policy maker. That is whether we expand the credit room or not. That is about money supply. Looking at the economic landscape now, my personal viewpoint is that it is important to expand the credit room for the economy in order to ensure liquidity. Well, it is because, well, if we look at the existing credit growth rate relative to economic growth rate, there is a strong demand for money, and if we assume that the velocity doesn't change, then there is a still rapidly increasing strong demand for money. Well, speaking of the external impacts, in the previous presentation we have heard of this already, but I would like to confirm that we will come under significant impacts from external factors. Another thing is the corporate bonds and stock markets that may give rise to the instability that we're experiencing. You have got the document already, so let me skip through this slide. Another point that probably we've all forgotten in the current context is the economic recovery support packages and their impacts. And some of the research reports have reminded us of the impacts. Well, regarding the support tools that involve a very low cost, then we may implement them easily. And there are other tools, including maybe a condition or a prerequisite to identify a enterprise recovering well before that enterprise can receive support. Then it's very difficult to implement. And also we have a portfolio of public investment as well. So now there is a story of the timeliness and whether we need to restructure these economic recovery support packages. This time last year, we identified that these are among the resources, important resources to support recovery for this year. But now there have been quite slow progress with these packages. Similar stories with export. So we have got a slowing down of export, and I think this trend will persist into 2023. Given the low income from the external world, it will lead to lower demand for our exports. Regarding foreign exchange rates, I'd like to skip through this. Now there are a few points I'd like to mention regarding the final months of 2022. And enterprises start facing difficulties regarding declining orders. So in the next session, we will hear more about what will affect the export markets. But generally, the PMI index of Vietnam is a little bit above 50, so a little bit above the growth line, not too much above though. Speaking of FDI prospects, I think there are certain prospects, but not too bright, regarding the overall slowing down of the global economy that can affect Vietnam economic outlook. and it may reduce the newly registered FDI in Vietnam. Export outlook is down, and that can affect attracting FDI. A more important point is the bottlenecks regarding attracting and dispersing FDI capitals. So we will not be able to have the absolute changes if these are not addressed. Another point I'd like to touch upon is the forecast for 2023. So now, in the most promising scenario, we anticipate growth rate of 6 to 6.5% for 2023. It may not be too high, but certainly it's not too low, given that we are coming under significant external risk. And here in this most positive scenarios, we are assuming that the external risk will not too negatively affect Vietnam. And please allow me another 1 or 2 minutes to finish my presentations. I'd like to talk about short-term and longer-term solutions. Speaking of the short-term solutions, the most important point here is that, well, we believe that we should focus on the story of addressing the dilemma between exchange rate and interest rate. Well, I myself believe that while interest rate is something very serious that deserves due attention in order to ensure that enterprises will be able to operate in a low-cost environment. And if we compare the interest rate borne by Vietnamese enterprises and foreign enterprises and put them into the story of growth and inflation rates, then apparently Vietnamese enterprises now are coping with positive interest rate much higher than those experienced by foreign enterprises, given that they are given the real negative interest rate. Well, another important factor is regarding how we are going to operate our economy in the coming time. Well, let's talk about the how. We can learn from the experience of regulating petrol prices and the supply of petrol, and we need to make appropriate changes. Now, regarding the solutions in the medium term and longer term, a few points to note. Well, there may be many different solutions, but I'd like to emphasize on one word. That is the policy mindset change, and that is about the anticipatory nature and how we cope with information crisis to make sure that we can add transparency and timeliness of information to the economy. Another lesson that we have drawn out of the economic recovery support packages, that is about the policy implementation cost. If the cost of policy implementation is too significant and implementation is not effective, then the policy after issued is mostly perfunctory. They're on the shelf. Another thing, well, I would like to have another recommendation regarding public investment. We have a lot of expectations for public investment as a driver for growth. And our overall calculation shows that it contributes about 0.4 percentage point, but it's like a black box. We haven't talked about where we should direct our public investment to achieve higher growth. So that is an issue that we should deep dive further in the coming time. Another thing that we should have a look at is the story of economic restructuring that should be closely aligned with the restructuring for FDI attracting. And let's talk about FDI bottlenecks. And given our analysis, well, we like to recommend that we need to have a targeted program. We have many different national targeted programs already, but after recovery, well, in 2020, we started talking about the need to have a national targeted program on labor quality improvement. So it is still a bottleneck until now. And well, given the time limit, I would like to end my presentation here, focusing only on the core issues. Thank you very much for your attention. Thank you very much, Dr. Chen Tuan Thang. We can see that, well, following your presentation, well, we can see that in 2022, the Vietnam economy has shown signs of strong recovery. However, in the context of significant risks and uncertainties in the global economy, the Vietnam economy is still facing with multiple risks and barriers. And in the recent presentation, you have touched upon many different solutions. in a systemic manner. So once again, thank you very much, Dr. Trần Toàn Thắng. And next, I would like to invite another speaker, Dr. Jonathan Pinkhurst, Senior Economic Advisors of UNDP Vietnam, to come up to the stage and deliver a presentation on exports still matter. Thank you very much. And the floor is yours, Mr. and Dr. Jonathan Pinkhurst.
Thank you, Mr. Kwong, Ms. Khalidi, colleagues and friends. I'm going to pull the lens back a little bit and talk about a very specific issue. This is results from a UNDP policy paper that we will be publishing shortly, which I wanted to share with you. And it's basically not looking at the immediate term or the recovery, but it's looking longer term and the importance of exports for Vietnam's continued recovery. Now, we've heard a lot. Let's see if I have enough coordination to both read and hold a microphone. It may be challenging for me. We've heard a lot about, in recent months, about economic self-reliance through integration. And there's been a lot of discussion about, well, what does this mean? Does this mean that we will have less emphasis on exports, or we will emphasize the domestic economy? And I think what our message is from the results that we will be publishing soon is that exports still matter very much for Vietnam and for other developing countries. The next slide, please. Just very briefly, if we look at the relationship between growth of domestic content of exports, this is not the imported content of exports, this is what is produced domestically, and that's on the x-axis. And we look at the growth of the rest of the economy, in other words, all of the growth of GDP that is not attributed to exports on the y-axis. We see that these things are very closely related to one another. And this is a relationship that holds well across periods, across time periods, across selection of developing countries. These are just all the countries we could find with the right data for domestic content of exports. And this is a very, very strong and a very consistent relationship. And Vietnam, you can see on the very far right of the graph, has been a really strong performer, both in terms of growth and in terms of exports, and that is because these things are very closely related. I'm not going to talk, I don't really have much time, and I'm actually eager to get to the next presentations in the panel, so I'm not going to talk a lot about why that is the case. Next slide, please. Why it's the case that exports are so important, but to summarize very quickly, without taking a lot of time, all developing countries are to some extent foreign exchange constrained. There's lots of ways to get access to foreign exchange. But clearly the best way to do that is through the growth of exports. It doesn't impose liabilities on the economy like borrowing does, or even FDI imposes liabilities on the economy in terms of foreign exchange payments for profits and repatriation. But exports increase domestic production. They're shown to be very closely related to productivity growth, and they relax the balance of payments constraint. Next slide, please. I'm going to skip this one also because it's a little bit more technical. It's about the elasticities of the income elasticities of demand for imports and exports. We don't need to go into this, but we do need to just say that it matters how much you export, but it also matters what you export. See, I wasn't coordinated enough to do it. Okay, so it matters how much you export, and it matters what you export. And we're going to talk a little bit more about that now with the results from our study. So basically what we did was we defined two different kinds of goods. Can I have the next slide, please? We defined competitive exports as exports for which the country has increased its global market share. So for Vietnam, footwear, for example, Vietnam is a very competitive producer because over the years, Vietnam's share of total global footwear trade has increased very sharply. So footwear for Vietnam is a competitive good. In contrast to that, we look at what we call dynamic goods. And dynamic goods are goods for which the total, the supply of that good, production of that good, is an increasing proportion of total global trade. So a good example of a dynamic good is transistors, right, and microprocessors. Over the last 20 years, the share of microprocessors in total global trade has increased. So microprocessors are a good example of a dynamic good. Now, when you see, eventually when you see the policy paper, you'll see why we use these terms. Basically, it's because measuring the elasticities is actually quite difficult, so this is sort of a proxy for looking at the income elasticity of demand of different kinds of exports. Next slide, please. So if we look over the period 1995 to 2018, this is looking at 3-year averages. And we chose these years because that's before the East Asia crisis, so it was during the period of very rapid growth in East Asia before the crisis, and also up to 2019 before the pandemic. We don't want to include the pandemic years. So here's a list of dynamic goods over that period. And you can see transistors, telecoms, pharmaceuticals are all very high up on the list, but it's not just high-tech manufacturers that are dynamic goods. I mean, some dynamic goods are, for example, iron and nickel and minerals, because the demand for those goods, copper, for example, is a very dynamic good. So if you're fortunate enough to be Chile and you have a lot of copper, then you have very dynamic exports because what you produce, which is copper concentrates from Chile, the demand for your main exports is increasing very rapidly. But it's not just minerals, it's not just high-tech manufacturers, it's also some agricultural products, for example, fruits and vegetables. And we've seen over the years that the global market for high value-added fruit and vegetable is increasing very quickly. And there are some very interesting studies being done about what we call the industrialization of freshness. In other words, because fresh produce now is very highly in demand, particularly in rich countries, and consumers in rich countries are willing to pay a lot of money for organic vegetables or for fresh produce that's perhaps not grown in their home market, exotic fruits and vegetables for their home market. These are very dynamic goods, and some of these goods are extremely important for Vietnam and for other countries. Next slide, please. All right, if we look at countries in Asia and we put them on a grid where we have the percentage of dynamic exports on the y-axis and we have the percentage of competitive exports on the x-axis, we can see that Asian countries fall into a couple different groups. So Vietnam is part of the group at the very far right of the graph, these are hyper-competitive economies. So basically, everything that they export, they have increased market share. So footwear, for example, in Vietnam, telecoms, mobile phone assembly, other electronics assembly, furniture, garments, everything that Vietnam exports over the past 20-year period has become more competitive in the global market. And that's very similar to India. I can see that my country names didn't appear. Anyway, in that group are India, China, Hong Kong, and Cambodia. Cambodia is on the very bottom, and Hong Kong on the very top of those hyper-competitive economies. On the bottom, so in the middle section, are economies that are not very competitive and not very dynamic. And they are basically what you would expect. They are Indonesia, Thailand, and Pakistan. And then there are economies that are producing goods that are very dynamic. In other words, they're producing goods that are increasing their share of global trade, but they're not terribly competitive in the sense of increasing their market share in the main goods that they produce. And they are, as you would expect, wealthier Asian countries. They are Singapore, Taiwan, Malaysia, for example. Malaysia back towards the y-axis. Okay, so we can see that Vietnam is very competitive. Vietnam is the red. Vietnam is very competitive. Everything it's producing is increasing its share of the global market, but it's not producing a lot of dynamic commodities. Next slide, please. So if we look at some Asian countries, what are their competitive and dynamic commodities? We only have one data point for Vietnam. We don't have a long enough time series for 2 data points, but telecom equipment, mobile phones is both Vietnam's most dynamic export and also its most competitive export. But if we look at some of the other countries, and it's changed over time. So in 1996, so over the period from the period of reform until the East Asia crisis, China's most competitive commodity was toys. Well, that's of course changed now, and it's telecom equipment. And Malaysia, computer equipment to transistors, so they've moved up in a sense. But you can see, and we will publish these results later, you can see that there's been a shift in the main competitive and dynamic commodities of these Asian countries. Next slide, please. For Vietnam, we can see that the competitive economies over this period, the competitive products, telecom equipment, footwear, furniture, apparel, as you would expect, transistors. And the most dynamic commodities, telecoms equipment, transistors, but there we see fruit, nuts, also very dynamic commodity, luggage, electrical distribution equipment, and so forth. Okay, next slide, please. Now, if the question is, does it matter? Does it matter if you produce more dynamic and competitive commodities? And we do a little statistical exercise. I don't have to go into this too deeply, but it does show that actually there is a positive relationship between how much of your trade is competitive and how much of your trade is dynamic. So these things are actually quite closely related to GDP growth. So it matters that you export, it matters that your commodities are competitive, and it also matters that your commodities are dynamic. Next slide, please. I'm going to wrap up now. Okay, this is basically showing over time. Let's skip this. Can we skip this and the next one as well, and we'll cut right to the end. Next, please. Next, please. Next one. There we go. Okay, one last point about exports before we close. Exports are not only closely related to economic growth, exports are also closely related to equality, in the sense that if we plot the relationship between the growth of exports, particularly the growth of manufactured exports, and the income share of the bottom 40% of the population, we find that there is a predictable and close relationship between these two things. So one of the reasons that Vietnam has had very strong income growth among the bottom 40% of the population, according to the household surveys, is the very rapid growth of manufactured exports. So exports matter not only because if your export growth is rapid, your economic growth is rapid, but also if your export growth is rapid, it has an equalizing effect on income distribution because it increases the incomes of the population in the bottom 40%. So thank you very much. As I said, this will all be published soon, and I hope you have a chance to have a look at the results in detail. Thank you very much.
Thank you very much, Jonathan, and thank you for the reminder of the importance of exports as a key factor in sustaining economic development and ensuring adequate foreign reserves and stabilization of exchange rates. For our next speaker, I would like to invite Mr. Nguyen Quang Thuan, CEO of Fingroup, to present the Vietnam corporate bond market, the need for a visible and strong hand. Mr. Thuan is chairman of Fingroup Joint Stock Company and CEO of FinRatings Joint Stock Company, specializing in providing financial data analytics, business information, and industry research. FinRatings is also a locally licensed credit rating agency in Vietnam. Please.
Xếp hạng tín dụng ở Việt Nam. Thank you very much, Ms. Ralma Al-Khadili and Mr. Đặng Xuân Quang. Ladies and gentlemen, please allow me to speak in Vietnamese because speaking of a very current affair issue of Vietnam and a very sensitive one as well. Here we have not only researchers and policymakers, but also reporters as well. So I want my wording to be exact in Vietnamese, and I really need the support of the mass media regarding the messages I want to convey today. Well, in speaking of the agenda, you can imagine why the topic of corporate bonds is included in the Vietnam Economic Pulse for 2022. It reflects the significant attention of the market to this topic. So the market is beating on a daily basis and focusing on corporate bonds, and there are a lot of headwinds that we are facing. Yes, corporate bonds is an issue attracting a lot of attention from researchers and policymakers. And here I would like to tell you a very brief story, probably. Well, I may not utilize the entire 15 minutes regarding the stories of the bond market and the impact of the bond market on risks regarding our macro balance, and also the realization of the economic growth indicators of Vietnam in the next year and the future years, as Mr. Francois Pinchot and Mr. Jonathan Pincus mentioned. This is because the bond market in Vietnam, while previously we spoke mainly of the banking system, and now we have a significant channel for fundraising in the bond market, and there is contagion effect, or we call it the snowball effect or domino effect. I don't have enough time to share with you everything that is taking place, but I hope that you can be selective with the information I share. And I will focus mainly on the third part of my presentation before deep diving into the details. The message that I want to convey is the title. Now we need to have the invisible hand. And as Adam Smith mentioned, we need an invisible hand to regulate our economy. Now we need an invisible hand that is determined and drastic. And if we only focus on GDP growth rate and the lagging indicators, but forgetting the leading indicators, then it will be too late. and it will affect our economic growth indicators and the macro balances. As mentioned by our National Assembly and the Prime Minister, so those are the main messages that I would like to convey. Well, give me 10 seconds to explain to you why I'm here today. Well, we have heard from Ms. Ralma Al-Khalidi regarding my background. But let me talk a little bit more about this. Speaking of the capital market and the bonds market, people have been talking about this extensively, and the government now is focusing on the issue of credit rating. And later on, speaking of the solutions, I will share with you what we are doing. And I hope that my sharing like this can help you and help the relevant stakeholders to build up a healthier market in the medium and longer term. So FinRating is an affiliated and subsidiary company of FinGroup, and we have been licensed by the government to provide credit rating services. So it is very timely, and we hope the credit rating industry can contribute to improve the credit worthiness of bonds, corporate bonds market in the near future. So the fire is there, and we need to address it with water. Well, there are three things that I would like to share with you, and we are relying on our in-depth market research. We conduct joint research with China, including S&P as well, and we provide policy papers to MOF and other national agencies as well. And we also provide some key risk assessment. And often CAs often talk extensively about risk, but I hope that you can have an appropriate look at risks. It would be best if the risks do not materialize, or if we can anticipate risks in advance, then we can accept it. I would like to share with our international colleagues here, and especially if we have foreign investors. The foreign investors community may be panic while anticipating that there is a crisis. So we need to join our hands, just like we are suffering from our skin diseases, and we have to address those skin diseases to ensure we have all-rounded and comprehensive growth. Well, people may complain that FinRating is complaining about risks everywhere. We don't want to put more oil to the fire. What we want to do is to remove the fire before it becomes bigger. I don't want to threaten people. I don't want to put more oil in the fire. I don't want to worsen those situations. So I really hope that you can understand my messages correctly. Yes, in the next slide. Speaking of corporate bonds, there are many things that we can talk about. Before I talk into greater level of details, there are 4 charts here to give you a market update. In the last 2 years, without the corporate bond market, the headwinds that Mr. Francois mentioned would have exaggerated. In the last 2 years, the total amount of money that we raised from the bond market was more than 1.5 million billion in Vietnam. And speaking of credit, we do not just look at banking credit. We should add 3 to 4% of the credit growth from the bond market. And while money supply in the last 2 years was supported a lot by the corporate bond market, especially during the COVID years that enterprises suffered from liquidity issues. It's not just the case for now, but in the last 2 years already. Now, regarding the size of the bond market, mostly we have private issuance, and after the size increased to 1.5 to 1.6 million trillion, and we have the repurchase or early redemption by enterprises after the panicking period, after the liquidity crisis, while the size was reduced to about 12% of our GDP. So it's got some low landing at that size. And secondly, speaking of the supply side, and the profiles of the bond issuers, we can look at figure 2, and probably you have read in the mass media already. Mostly we had banking and real estate bonds, and for other industries we have manufacturing, energy, financial services, and other sector bonds. So whenever we detect the disease, we need to focus or zoom in order to address the disease in particular. For example, if we have a stage 1 disease, we should use stage 1 tools rather than using stage 3 or stage 4 tools. Because our body may be damaged that way. Speaking of the banking sector, we may have the issue of SCB, but other banking bonds are still very sound. It's unlike the previous crisis. Now, the banking structure has changed a lot. We now do not rely entirely on banking credit. There is bonds, and speaking of banking bonds, mostly there is a trust issue coming from the various breaches. It is not that the credit quality of the banking system declines, causing the instability that we have seen. And later on, I will talk more about this. And we should select the larger enterprises where while private investors can own a lot of their bond, and we can have a private issuance. And then gradually we can announce their good results in order to build up trust gradually. And I will talk about this in policy recommendation. But the third figure is about investor-based primary issuance. For any market, we have the supply side, demand side, and infrastructure in the middle. Speaking of the demand side, the biggest issue of the Vietnamese bond market is a lack of players, of buyers. Mostly we have banks, security companies, and insurance companies, insurance companies participate very limitedly, and the SBV recently issued Circular 13 to prevent banks to participate too extensively in the corporate bond market, and that limits the demand side. We anticipated this more than a year ago with the issuance of Circular 13. Another issue affecting the trust issue is that the privately issued bonds were sold to non-professional or individual investors, and the latest Decree 65 already addressed this. And speaking of individual investors, given the current context of Vietnam, they may lack an understanding of corporate bonds, because corporate bonds are the products from investment banking rather than commercial banking. So that is a mis-selling issue of the market. So that is not just a policy loophole in the past, but it is also the story of the fiduciary roles of the issuers. Okay, so we should take a comprehensive look at the issue in order to come up with the right solution. The fourth solution is about the suspension or the freezing of the issuers. In October, we have only one issuance, so basically the market has now been frozen. So it has transitioned from a very strong growth period from 45 to 50% per year to a sharp declining and now a freezing state. And so just now I'm telling you a story of what's happening, and you can see that the risk is spreading to the stock market, the banking sector, and there is a bond run and fund certificate issues as well. So it affects the banking system a little bit, and there is a selling off of those stocks as well, especially regarding the stocks coming from the bank owning a lot of bonds. So that is called a bond run, fund run, etc. Now, speaking of the risks and the impacts, I would like to talk about the impacts on economic growth in the short and medium term. I would not talk about the long-term impact analysis. While speaking of the risks, there are quite a few risks, but I'd like to talk about 5 major risks affecting our economic growth. Well, there is a term here that may translate very negatively to Vietnamese. The mass media, please be mindful of this. That is not our social unrest expanding. Please be mindful of the wordings in Vietnamese. With this, we are talking about the loss of trust and also the collusion among the issuers and the buyers and the impacts on individual investors. So here we are talking about the fiduciary role and the need to align with best market practices, etc. In Vietnam, we should not just focus on selling at all cost. We should be mindful of the impacts of such selling and the protection of investors' rights and interest. Let's not just try to sell anything at all cost. So that is the biggest limitation. Another thing is the lack of information. 95% of the issuance is private, and we have a figure, 32%. Of MOF, but we have no official figure. The size is very small, but while it is not very good to come up in the media because that can be damaging to the image of the Vietnamese financial sector and Vietnam as a country. And later on, I will talk about priority solutions to address this issue. And for the issues that have been addressed, then we should expedite the process further and distribute the money collected to the investor. Because any risk in this area will affect the image of Vietnam, it will not cause social unrest because the size is so small. And next, I'd like to talk about bond defaults and cross defaults. And here it's not to the level of category 3 debt in our standard debt classification system. However, here we are talking about the delay in making principal and interest payment, and this will affect banking credit as well, because for any enterprise they will raise funds not only through their bond channel but also through banking credit channel as well, and there may be cross default risks up to 50%. And now, given that, I would like to talk about corporate debt liquidity crunch. So this will affect the real economic activity of these enterprises, and that is some spillover effect. And some real estate firms have suffered from their operational issues, and that will lead to disruption of economic activities. So enterprises, they may suffer from very low credit. They will not be able to obtain any further credit or produce goods for export, for example. And another thing that may be a risk in the medium term is foreign capital flight, not only on the indirect accounts but also on the direct accounts as well, as is the case in some of our FDI enterprises, or there may be a slowed FDI inflows due to the impact of the financial market, and that impact can be significant. You may know this already. Now, the fifth risk that I would like to mention is that we will miss the economic growth target of 2023. Speaking of China, JP Morgan did a research that shows that if capex investment is reduced by 10%, then GDP growth rate of China will be reduced by 0.7%. I think the story is not too different for Vietnam. Obviously, now here we talk not just only about bonds and real estate, but it's about whether we will increase the room for credit or money supply, and the trade-off is increased inflation, or we're going to tighten monetary policy further to keep inflation under control. Many forums are discussing this issue. I have 1 minute left, right? Thank you. Now, speaking of this, we have very low and weakening credit quality. And still corporates are issuing more bonds. I have provided a warning like this 3 years ago, and back then everyone hated me, but I still tried very hard to pass on this message. And people have been talking times and times again about the short-term risk, and we have quite low pressure between now and until the end of the year. We have only 3 to 4 enterprises having a liquidity issue, failing to meet the requirement for 23,000 billion until the end of the year. And if we still have a situation of freezing bond market and high interest rate, very low or zero credit growth, then it will be very difficult for the enterprises. Enterprises rely not only on the bond channel, the banking credit channel, but they have a cross-borrowing channel as well. So, if we don't address the corporate insolvency risk, there will be significant impact on the economy. Now, let me talk about the recommendations very briefly, because I don't have enough time to deep dive into each recommendations. So I will mention the urgent solutions. I have enough rationales to make this recommendation because we are dealing on a daily basis with our clients and customers, and we realize the impact on the short and long and immediate future. I will not have time to talk about the longer term future, but researchers and policymakers can look into to what extent we should expand the room for further credit. And also we have solutions including to provide the money to the buyers of social housing, and we can require the investors or the owner of such housing project to reduce the price. And they can go through the banks to issue 10-year bonds, or the bank can allow to change the lending interest rate on the short term and medium term, or we can use public investment money to buy long-term bonds, and that can support not only the real estate market but also the bond market, and there may be many other solutions. Thank you very much for your attention. Wow, thank you very much, Mr. Nguyễn Quang Thuấn from FinGroup regarding the corporate bond market. You have provided a lot of analysis and insights regarding the various risks, and you have made recommendations for the solutions. So just now for session 1, we have heard from 4 presentations. And right after this, we will move on to the Q&A. So we really hope to receive valuable questions from you, our dearest participants. And we have gone over time about 15 minutes. So please be concise with your questions. Thank you very much. Hello, so I'm from the Institute of Economic and Political Sciences, HCMA. So I have a question to Mr. Jonathan Pincus. Thank you very much to all of the speakers for your very interesting presentations. I have a question to Mr. Jonathan Pincus regarding UNDP research regarding the importance of export and the correlation between export and other indicators. In your research, you emphasize on 2 points that I think of as very interesting. That is the export commodities of Vietnam, including competitive and dynamic commodities. This is very interesting. Also new to us. So my question is, well, in the shift of the export commodity structure of Vietnam in the past 10 years, and also the increase of commodity and dynamic commodity, the increase of competitive and dynamic commodities, and the catching up of the trend, is that thanks to the correct forecast of analysis of analysts, or just a random factor that we have managed to have that successes?
Thank you very much for the question. I'll be brief. I think Vietnam has been very agile about following demand globally. So I think it's partly luck. There is always luck involved in what commodities that you export, as the example of Chile shows. But there's also agility, and one of the things that we want to emphasize in the paper is the importance of following global market trends and getting in front of them to the extent that you can. I think Vietnam's been extremely agile, some of that driven by foreign direct investment, so investors coming in, developing new products for export and so forth, which have been very dynamic. But part of it has also been within Vietnam's own producers, particularly if we look at the seafood industry has been extremely dynamic in its ability to find new markets and to move into higher value-added production. So I think the short answer is there is some luck involved, and there's also some good planning, not by government, but largely on by industry.
Thank you, John. I don't see any other hands, and in the interest of time, we will take a short break. I assume let's try to keep it to between 5 and 10 minutes so that we can return to the next session after the break. So thank you all very much. Thank you to my co-chair. Thank you for a fascinating set of presentations, and look forward to the next.
We can continue on to our second session with the panel discussion. Ladies and gentlemen, we have completed session 1 with 4 presentations on the global economic outlook, Vietnam's economic outlook, exports still matter, and corporate bonds market with an implication for short and medium-term growth. And now we are moving on to our second session. We would like to invite the following speakers, Mr. Kính Văn Lực, Chief Economist of BIDV, Mr. Thanh Đức Việt, Director General of Gammon 10 Corporation, Ms. Virginia Foot, Vice Chair of AmCham, Board Member of Energy and Power Working Group of Vietnam Business Forum. Ms. Nguyễn Lan Hương, former Director General, Institute of Labor Sciences and Social Affairs. Ms. Đặng Thị Thu Hoài, Director of the Department for Sectoral and Economic Studies, CIEM, MPI. And Mr. Lương Văn Khôi, Vice President of NCIF, MPI. Mr. Lương Văn Khôi will be the moderator of this panel discussion. Ladies and gentlemen, so we have completed session 1 with 4 very concise and valuable presentations on the global economic outlook, sailing into the headwinds. The second presentation was on Vietnam's economic outlook update. The third one, entitled Exports Still Matter. This is a very good one. The first two were very insightful, and Mr. Jonathan Pinker's presentation on Exports Still Matter have raised very new and insightful points regarding the competitive and dynamic commodities and the trends. And what's new in this research is that we provide evaluation of the impacts of these competitive and dynamic commodities on export growth. This is a very new and good finding. And the fourth presentation is one of current affairs, assessment of corporate bonds market by Mr. Nguyễn Quang Thuấn, CEO of Phoenix Group. I believe that all of the 4 presentations were of decent quality delivered by the speakers of session 1. Now we have session 2, and we welcome 5 speakers who are the prominent figures, not only locally but also internationally as well. So we will discuss the economic drivers in the short term, medium term, and longer term. So we will talk about exchange rates, balance of payments, and interest rate, which has attracted a lot of attention by the government. And secondly, we will talk about, given the headwinds, as delivered by Mr. Francois Pinchot, resident representative of IMF Vietnam and Laos, what solutions are we going to have to sail into the headwinds? And the third topic, attracting a lot of interest by society and governments alike, is the issue of labor and employment following COVID-19. The first topic is about labor productivity, and this is an important economic driver in the medium term and longer term. The Vietnamese government has made a commitment to invest in clean energy in COP26, and we have got Ms. Virginia Food, Vice Chair of AmCham, joining with us today. So first of all, let me introduce to you Mr. Thanh Đức Viet, General Director of Gammon 10 Corporation. So Gammon 10 has a history of 70 years. And given the very turbulent context of the garment and textile sector in the face of declining demand globally, so Mr. Thanh Đức Viet is the captain directing how his boat is going to sail into the headwinds, and he has come under a lot of pressure in order to maintain the brand name of Gammon 10 and to still promote the growth and development of Gammon 10 Corporation. Well, a very prominent figure from Cham, and she has appeared in various forums chaired by our Prime Minister and also from the Business Forum of Vietnam. I'd like to introduce Ms. Virginia Food, Vice Chair of Cham and board member of the Energy and Power Working Group. With more than 30 years experience in Vietnam, Ms. Virginia Food has provided on-site quality advisory services, supported in planning and government affairs. Ms. Virginia Food is a prominent expert in geopolitics and a senior advisor to a Washington, D.C. based corporation. And joining in our forum today, we also have another famous speaker and also a key speaker in a lot of TV programs and also in global and national forums on economic and banking and finance topics. Mr. Cảnh Văn Lực, the chief economist of BIDV Vietnam, is also the director of BIDV School of Training and Research. And also, he's a member of the National Advisory Council for Monetary and Economic Affairs. And also, speaking of labor and employment issues in Vietnam, we must not forget Ms. Nguyễn Thị Lan Hương, a former Director General of the Institute of Labor Science and Social Affairs, MOLISA, or ILSA. So she has got important contributions to the areas of labor employment, social security, and poverty reduction in Vietnam. Originated as a young researcher trained overseas with a lot of in-depth macro and microeconomic issues is Ms. Đặng Thị Thu Hoài to my left-hand side, who is the director of the Department for Sectoral and Economic Studies, CIEM MPI. So she is an expert on labor productivity today. Now in session 2, along with our 5 recently introduced speakers, I will help to shed light on the economic drivers in the short, medium, and longer terms. We have a little bit more than an hour to talk about all of these issues, and I really hope that our speakers can try to be very concise in all of the topics that I've mentioned. They are the issues of interest by MPI and the Vietnamese government. Please limit yourself within 10 minutes. And also, we will raise questions all in one go. And I will share with you the issue of interest in a go. First of all, to Mr. Cảnh Văn Lực, as mentioned in session 1, now Vietnam is facing deteriorating global conditions, and in Vietnam we have declining balance of payment, exchange rate and interest rate pressure, and also impacts of COVID-19. How do you think of the current situation? That is the first question. The second question is that Vietnamese enterprises, state-owned and private enterprises, what risk of ER are they facing? And also the interest rate in combination with the exchange rate risk, will they threaten the Vietnam macroeconomy? And will the risk of declining capital inflows affect the medium and longer term growth? And if yes, there is a risk, can you please elaborate? Okay, thank you very much, Mr. Hoi, the moderator for session 2. Well, to our organizer, to our experts and representatives of the business community joining our forum today. Well, in fact, speaking of this topic, well, we have to return to a very long history, back to the root cause. But I'm given only 7 minutes, and I will answer the 3 questions of strong interest by everyone. First of all, let's talk about global inflation rate. Has it passed its peak? And secondly, global economic recession. How will it unfold? And obviously, these stories will affect the need for interest rate hikes and the macroeconomic conditions of Vietnam. So, in response to the first question of whether the global inflation has passed its peak, well, I think maybe here and there we are passing the peaks. In particular, global CPI this year is projected to be 8.8% on average. And this year, this may decline to 6.5%. 2024, it will be reduced further to 4.1%. So right now, the global CPI is going on a declining trend. In fact, commodity prices, oil prices, and material prices have been declining since July. So given our monitoring, we have the U.S. headline CPI and core CPIs are declining gradually. While back in June it was 9.1, July 8.5, August 8.3, and then now it's 7.7%. So even the core inflation and headline inflation of the U.S. Have been declining. So while forecasts believe that Fed will reduce the extent and pace of interest rate hikes. Secondly, I'd like to talk about the possibility of a global economic recession. So we have got a very comprehensive report, and in which we have identified 9 different aspects of a global economic recession. We have found out that next year there is a possibility of global economic recession with the probability of 50 to 60%, and it's about between 60 to 70% for the US, 50 to 60% for Europe, and under 50% probability for China and Japan. However, for this recession, we want to use the term of light and short recession. So for next year, while global GDP forecast is anticipated at 2.3 to 2.5%, or the worst case is 2%. Well, by short, what I mean is that while looking at the recent economic recessions, the average duration is between 10 months and 24 months. For this time, we anticipate a recession of up to 1 year. So it will start from Q2 2023 to the end of Q1 2024. So this is a light and short recession for the next 2 years. The third topic I'd like to talk about is interest rate hikes. So we believe that Fed will continue to increase interest rate, but the pace and extent of interest rate hike will decline. So maybe for next time it will be 0.5 percentage points. And probably by the end of Q1 2023, Fed will temporarily stop their interest rate hike. And other countries, including ECB, the European Central Bank, or the UK Central Bank, so our projection is that they may increase the interest rates until the end of Q3 2023, and then they will stop. For Asia, maybe the Philippines, Korea, and India, they will increase their interest rates following ECB, maybe by the end of Q3 2023, and then they will stop. Now, how is the story for Vietnam? Well, I believe that for next year, well, it is quite clear that we will face with multiple challenges, as we have seen in Mr. Thang's presentation and other speakers' presentations. So I believe that for next year, our growth will slow, and we will have higher inflation. And we have provided a scenario where the baseline case indicates 6 to 6.5% growth. And inflation for next year will be between 4 to 4.5% because there is some time lag and there are the second round and third round impacts of the imported prices, and there will be further petrol price or oil price hikes. The Vietnamese National Assembly and government have recognized these risks, so that is why we have reduced our growth rate to 6 to 6.5%, and we have accepted an inflation target of 4%. So here in the most promising scenario, we will have these figures, but while we may have more challenges, there will be impacts on export, investment, and international tourism in the face of a light recession, as I mentioned. Well, for export, we forecast that next year we will have about 8 to 10% growth relative to about 15% this year. And secondly, speaking of investment, well, it is quite clear that we have a smaller figure for newly registered investment, well, partly because the zero COVID policy of China, but secondly, due to the increased interest rate and also macroeconomic instability, which hinders foreign investors' decision to expand investment, and also they have tried to shift their investment to somewhere with fewer risks and also better interest rates. So that's about risk. But finally, let's talk about interest rate and exchange rate. Well, the interest rates of Vietnam have increased quite quickly in the last 2 years, and in the last 2 months. Prices are increasing rapidly, especially in October and November as well. So, well, probably for Vietnam in the coming time, interest rates, well, we believe cannot and should not increase too rapidly and too much. If we have to increase interest rates, we should do so very gradually. And, well, we hope and we also forecast that in the coming time, interest rate hikes globally will also slow down, and the exchange rate pressure globally will also be relieved. So there is not much of a reason for us to increase interest rate too much and too sharply. And if we do so, maybe it will be unbearable for the business community because our interest rate is already too high. So, well, in the coming time, we do recommend that we should stabilize our interest rate. If we have to increase the interest rate, then let's do so gradually. Now, speaking of exchange rate, from the beginning of 2022, the Vietnamese dong has lost about 9%, and from now until mid next year, and given the continued Fed interest rate hike, there will be further pressure on the Vietnamese dong, but the pressure will ease up a little bit. Well, here we are talking about forward looking. It will be a 3 to 4 months horizon, and the pressure on our exchange rate will alleviate over time, and the extent of Vietnamese dong depreciation against the US dollar will be reduced significantly compared to what is happening this year. So the question for Vietnam, and my final point in policy recommendation, is that we should be patient and persistent with macroeconomic stabilization. And secondly, we have to remain calm. Now it's a very important point for policy coordination. Now regarding the timing and the dosing, we should try to strike a better balance between interest rate and exchange rates. Now, in the recent recommendations, well, I've seen that for some recommendations, they focus on having flexible exchange rate regulation, and let's try not to increase interest rates further or be very gentle with any interest rate hikes. I totally agree with this, but it depends on how the situation will unfold. Yes, so given the sharing of Mr. Can Van Luk just now, we can see that there are a lot of challenges posed by the local and international context for 2023 Vietnam's economy, especially regarding the high inflation among developing economies, and also what is happening in our major trading partners that affects our export outlook. And we've been talking about the exchange rate and interest rate pressure. I totally agree with Mr. Luk that our interest rate will not increase too much next year. Looking at the substance of the issue, well, high interest rate hikes have been attributed to the supply side crisis, mostly due to the Russian-Ukrainian war leading to oil price spikes and supply disruption. So if we continue to increase interest rate, it will pose even more challenges to the business community. So in the next year, we believe that the policy rates of Vietnam should not be increased too much further. And we have mentioned the global headwinds, and this is clarified in IMF presentation. So now we'd like to hear from Mr. Thanh Đức Việt, the General Director of Garment Tan Corporation. Can you talk about the overall challenges of the garment sector in general and Garment Tan Corporation in particular? We have a few questions to you. Given the signs of uncertainties of the Vietnam economy towards the final months of 22 and the probability of a global recession, declining global income, and increasing global inflation and interest rates, so given the garment sector as a core export sector of Vietnam, how will this be affected, and what will be the impacts on the garment sector in general and Garment Tan in particular? And secondly, speaking of the main garment trading partners of Vietnam, now given the presentation delivered by Mr. Jonathan Pincus from UNDP, while speaking of the competitors of the garment sector of Vietnam and Garment Tan Corporation, can you talk about them, and how do you think about the competitiveness of the garment sector of Vietnam and of Garment Tan Corporation regarding logistics costs, production costs, and other costs? And secondly, what can Vietnam do to reduce reliance on export? Because the more we export, the more we need to import the input materials. And in terms of policy solutions, what can the state and government do to support the business community like Garment Tan Corporation? Well, ladies and gentlemen, Garment Tan Corporation is the only business representative invited by NCIF and UNDP to this forum. So first of all, to answer the questions just now, let me go straight to the points that we believe to be reflected in the actual conditions of Garment Tan now in 2022. Well, let me be clear that I'm speaking from Garment Tan Corporation, and then above me, I've got VITAS, got the Vietnam Association of Garment and Textile, and our parent company as well. So maybe our point will not be as accurate as what is mentioned by VITAS and Vinatex. So I will talk about the current situation of Garment Tan Corporation and of our customers. So probably in 2022, here we have got a definition of the overall context. And this was mentioned by a development economist from 1987, that we are living in a VUCA, VUCA world with a lot of changes, uncertainties, complexities, and vagueness. And it is quite true for 2022. At the end of 2021, we anticipated that 2022 would be a very good year for the garment sector, including for Garment and Corporation, because for our importing partners, including the US, Japan, EU, we export to about 66 countries, and we have 12,000 workers in 18 factories. And we need to provide projections at least 6 months ahead. Normally, we have projections 1 year ahead. In 2022, we have a good year for the garment sector until June this year. And for the second half of 2022, well, depending on the enterprise, depending on what product line they have, and in the garment sector, there are a lot of products. For example, for Garment 10, we produce everything I'm wearing, but we don't produce sportswear, we don't produce T-shirts or polo shirts. Therefore, well, in the garment sector, so for our peers, there are other companies that were affected negatively ever since July into September. They have a shortage of orders. There are other peers which experience a shortage of orders from October only. But for Garment and Corporation, we're a little bit more fortunate. We don't suffer as much of a situation of order shortage because we have been established for a very long time. And we have a strong discipline like that of the military forces. So we have 4 generations in that case, and we have a very strong brand name on the global market. So our customers from the US, European, and Japanese markets, and in Vietnam, if they do a Google search about which the best garment corporation for T-shirts are, we would come up to be the first prominent supplier. And we have maintained a strong reputation. And even if our customers don't have too many orders, they will prioritize us. And then secondly, we specialize in office wear, and for the last 30 years, that has been our main areas. When we export to Western Europe, the US, and Japan. Another strategy is that we have a diversification strategies in terms of market, and we have performed well even back in the 2008 recession or in the COVID years. And we try to balance our market shares and allocation to the US, Japan, and Western Europe market. In the past 3 years, in the past 5 years, we have signed 16 trade agreements. And whatever trade agreements offer the best, highest interest to Garment 10 Corporation, we have tried to allocate the highest share of our products to the most beneficial markets. And in certain markets, we have orders up until the Lunar New Year as well. And if you ask who our competitors are, let me share with you that we have accepted to deliver orders with more fashionable products, with a shorter delivery time, with more effort required to deliver. And this is quite difficult for any other corporation to pivot like us. Because most of the time they focus on the low value added products, very basic products, then they cannot pivot as quickly as us. Another strategy is that we have invested heavily on technologies. For example, for a suit like what I'm wearing now, well, to invest for 300 workers at the most advanced level of factory, we need to spend at least 10 million USD in such a small factory. And given the strong foundation that we have now, we are a little bit more fortunate than other peers that we still have orders until the end of Q4 and even up until the Lunar New Year. However, in this overall context of challenges, like until last week, we have received a lot of negative information from our customers. Especially regarding our very regular customers as well. They have reduced their orders. The world now has become so vague, volatile, and so uncertain. Last week, I joined an APEC forum in Thailand, and they told me that, hey, Garment 10, now looking into my inventory. So for the previous years, we can sell a lot at this time, but now Christmas is quite near the corner, and we still have a lot of stock here. And even if they have purchased the materials already, but given the significant inventory, they are waiting until they see the sale figures for Christmas before they place new orders. And we have purchased materials for 6 months, and given the reduced orders, we still have a surplus of the materials. About 10 to 15% of our customers have ordered us to slow our production following the Lunar New Year. So maybe for Q1 of 2023 and even Q2 of 2023, it will be very difficult for Garment 10 and probably for our peers in the garment sector as well. Well, secondly, you have asked about our competitors. I've mentioned in my initial sharing. Speaking of national or global competitors, I think now Vietnam is among the top 3. And maybe even if we have another competitor, we can still be among the top 4 countries with the largest share of garment sector globally. So we have China, and we have a switching of positions between Vietnam and Bangladesh. And the 4th position, we have India. India is very strong in the garment sector, but mostly they serve the domestic market. And if they have a higher share of export, they can be a very strong competitor of Vietnam. Other countries include Myanmar, Cambodia, and most recently, many of our U.S. customers have looked for suppliers in Africa, including Kenya, Madagascar, or some other African countries. So we believe that, well, probably this is also related to geo-economic factors as well, because the input materials for the garment sector is concentrated mostly in countries like China and India. And in Vietnam, we have grown fast in joining the supply chain. And another example, Bangladesh, let's say, speaking of labor cost and all of the production factors of Bangladesh, they may have lower cost than Vietnam. However, a coin of Bangladesh is that they don't have proactive control of the input materials they have to purchase from China. It takes 30 to 45 days, and then it takes them some time to deliver the order. And now, given the need for speed, it will be very difficult for Bangladesh to compete against Vietnam. And then in terms of the skills level, Vietnam has a superior advantage, and in Vietnam there is no concept of cheap labor cost for the garment sector. In the past 3 years of COVID-19, and during that period, I've been promoted to the top leader of Garment 10. And the average salary of our worker was 8 million Vietnamese dong, including social insurance. And in the last 10 months, the estimate is 8.9 million. And in the past 3 years, the workers' average salary has increased by 30%. So now we don't have the advantage of cheap labor cost anymore, and we need to find out what the advantages of the garment sector will be. The third question is about exchange rate, right? Okay, so for some purely processing facilities, well, the more devalued or depreciated the Vietnamese dong, the better it is for our processing facilities because we can export more. Well, for Garment 10, we mainly produce FOBs, and 92% of our products are FOB. So we do purchase input materials and we export the final products. So given the exchange rate depreciation, well, often we say that it benefits export and disadvantage imports, but it depends on the situation of each enterprise. For Garment 10, it is already fortunate that we don't suffer a loss from exchange rate gap. For example, in the recent October and October, There was 2 times where SBV increased the policy rate a total of 150% relative. And then in October, the exchange rate increased by 4.6%. And from the beginning of the year, the exchange rate increased by 9.1%. That is USD relative to Vietnamese dong. And if we are not careful, the input material price will increase as well. And if we are not careful enough, we can make a loss even by importing the materials. So therefore, I would like to make a recommendation in the third part of my sharing. So we are following the macroeconomic situation as well. U.S. Fed has a very clear roadmap of interest rate hikes. So for every meeting, they discuss interest rate hike, but their roadmap has been informed a year in advance, and they don't change this roadmap. And we expect that Fed will revise the interest rate to a smaller extent than the planned roadmap for interest rate hike. But in Vietnam, there have been interest rate shocks, right? And I have a friend who is not in the government sector, we discussed, and he said that he imported construction materials. He focused on the domestic market. But he said that the interest rate hikes have been killing both exporters and his enterprise alike. In the last 2 days before our discussion, he said that he has lost 120 million USD. For government 10, we receive more preferential interest rates because we are large corporations. But for the short-term interest rate, about 7 to 8%, medium to longer-term interest rate over 10%. So for us business communities, what can we do to have 10% or plus growth per year? Secondly, let's talk about tax. We pay about 20% tax for the government sector. Our money dries up before our sweat dries up. And for bank interest rates, we pay 10%. For tax, we pay 20%. And now all of the input costs are rising. What can we do? And many enterprises have said that, hey, let's shut down our business and then we'll be safe. But what happens to our workers? And we have 12,000 workers with 18 factories. Where will our workers go? And what if they don't come back following the recession? We have 76 years, but it's like we have lived in this world only for 7.6 days. And for high value added government products, we need to train our workers over a long period of time for them to be able to deliver these products. So for the government authorities, we should have very thorough forecasts and projections to come up with very cautious monetary and fiscal policies so that we can avoid too abrupt impacts on the business community. The Vietnamese economy now relies heavily on exports, not just the garment sector, but also the footwear sector, civil processing sector, furniture sector, and even the paper sector. So we are affected significantly as a result of the declining demand or very volatile demand from our major trading partners, with rapid increase of demand in the first 6 months and also rapid declining in the later 6 months. Those are my sharing. Thank you very much for your listening. Thank you very much, Mr. Viet. So first of all, Mr. Viet, let me inform you that joining with us today, we also have a representative from the working group 1317, representative of MPI, SBV, MOF, and MOIT. So your policy recommendations, we do hope that the representatives and members of the working group 1317 can be receptive and use them as inputs for more stable policies that should be anticipatory for the planning of enterprises. Secondly, I would like to congratulate Government 10 and the government sector in general. For your successes before August 2022, However, given the signs of slowed export from September and maybe into 2023, we anticipate multiple challenges. Especially, we can see that our major trading partners of Vietnam, including Taiwan, China, Japan, now they are still applying very stringent COVID control policies. And these are the countries that we import a lot of input materials for the garment sector, especially for Taiwan and China, right? So that will have a lot of impact on our input materials price. So in the upcoming years, there may be serious challenges to garment tan, in particular in the garment sector in general. And well, a good sign is that Garment Tan and many other garment corporations have taken bold steps in order to adapt to the new situation so that we can sail into the headwinds. The global economy and global geopolitical changes since 2022 are quite unpredictable. Many of them cannot be anticipated and unprecedented. So it's important that the government provides timely responses that align with the new situation. Now, to share with you, MPI and the government has organized various forums to listen to industry associations, business associations, experts, and international organizations for inputs, for solutions. Another thing is the story of exchange rates with significant impacts on the business community, especially given that we have to import input materials. So Working Group 1317, could you please look into a roadmap of careful exchange rate and interest rate movements so that we can avoid too abrupt impacts on the business community? Another thing is that, well, the U.S. has issued a bill to prevent forced labor. And regarding cotton production, for example, apart from that, the EU has adopted a strategy or a draft law to prevent child labor and forced labor, and they have implemented stringent measures on this. So I hope that the garment sector in general and Garment Tan Corporation can devise appropriate solutions to respond to this new context. And secondly, well, our garment sector is very adaptive and proactive. Rather than focusing too much on the traditional sectors, we have been proactive in looking for new partners. For example, we've mentioned India and Pakistan. Well, they are partners, and well, we don't have new generation FTAs with them. And I would like to mention RCEP, CPTPP, VFTA. For RCEP, we have China, right? For 3 years implementing CPTPP, we have got significant export of garment commodities to CPTPP countries, including to Canada and Mexico. So I hope that given the global headwinds in the final months of 2022 and into 2023, I hope that Garment Tan Corporation and the garment sector of Vietnam in general can sail successfully into the headwinds. And thank you very much, Mr. Viet, for your sharing. And next, we would like to ask a few questions regarding labor and employment. And this question is dedicated to Mr. Nguyễn Thị Lan Hương, former director of ILSA. So speaking of the impacts of 2020, 2021, for the early months of 2022, there are signs of positive recovery. However, now there are signs that there is a very different and difficult situation faced by workers in different sectors, including what Mr. Viet mentioned, including the very high level of inventory in a lot of different sectors, and the situation will worsen in 2023. So the risk of job loss and slowing of jobs is high. How do you think of this risk following COVID-19? Secondly, in terms of policy options, what does the government have to do to improve the living conditions of workers in export industries, especially the core export industries, including garment, textile, chemicals, processing, mechanics, and electronics? And in the major export industries, what other issues faced by workers apart from what we've mentioned? The third question is, well, the impacts of COVID-19, will that be just those short-term challenges? What signs indicate that they will affect the Vietnam economy in the medium term and longer term? Thank you very much. So first of all, I would like to thank NCIF of MPI and UNDP for inviting me to this panel discussion. Speaking of the labor market, let's say I have exited the labor market. Given that I'm now retired, what I share here is my personal viewpoints. So first of all, well, before answering your questions, Mr. Khoi, well, let me talk a little bit about an overview of the labor market. Probably you know this already, but I work in the labor sector and I have followed through with the labor statistics from 2010. There are two phases between 2010 and 2018 and 2018 to 2022. Actually, by Q2 2022, there is one point, well, given what I've heard since the morning, you've been talking about economic outlook and recovery, etc. I feel a little bit painful because the labor market has too much doom and gloom given the rapid growth and given the strong momentum gained by other sectors. But maybe it is attributed to the price increase impact. Speaking of the labor market, it has been affected significantly by COVID-19, both in terms of the breadth and the depth. Speaking of the breadth, there have been job losses. Speaking of the depth, there has been a reduction in workers' income and social security protection. Well, we don't have much time to dig too deep into this, but there has been a widened gap between urban and rural areas. According to our statistics, between 2010 and 2018, we had a very good economic growth. And back then, we were under the golden population period. We may experience 1.15% of the labor force growth. However, between 2020 and 2021, we suffer negative growth of 0.37%. So there was a big gap between the two periods. And as of Q2 2022, we had a total of 52 million workers. But back in 2018, we had a total of 54 million workers. Please be mindful that our population growth rate now is very low, about 0.6%. But every year we have an addition, 1 million workers into the labor market. So there are issues with the labor market about how to attract new workers. But looking at the urban-rural gap, there were stronger impacts in the rural area rather than in the urban area. Given the labor market shift, there is a reduction of rural workers. But there have been the situation where workers return to rural areas finding no jobs. Well, speaking of the structure, we have got a reduction of agricultural jobs significantly and at a rapid pace. A good sign is that there has been a positive shift in the labor market structure. As of 2010, we have 37%, but now we have a much lower rate. However, there is still a redundancy situation in agricultural labor market, and if we fail to have good shifts, if we fail to have the rural areas to benefit from economic successes, then the situation will still be very difficult in the rural areas. And there is a paradox as well. For the logistics industry, there has been a very high pace of employment reduction as a result of COVID-19. And well, now let's talk about comparison among different industries. Speaking of economic growth, there is a very fancy logo that says leaving no one behind. But apparently, in the story of economic growth, we have left behind labor market growth. Provided that we have good economic growth, apparently we don't really care about the labor market. Whenever there is a shock, it will be absorbed by the labor market. And then when the economy is recovered, nobody cares about the labor market seemingly. So the labor market always go behind. And what I want to say is that while it is following the other developments, and about how to offer the best venue for the labor market, that is a question. Another thing is that, we have the self-employed workers as well, and those from the household businesses sector, and they have a lower and weaker recovery process rather than those in the other sectors. And we apparently have got a massive movement of workers from urban to rural areas during COVID-19. We have not got a reversed movement from the rural to urban areas, right? And we have heard very promising signs from the government sector. But I think looking at Vietnam as a nation and given the statistics on labor and employment from GSO, now we have about 9 to 10% income increase for workers' income compared to the period of 2010 to 2018. However, if we factor in COVID-19, the increase is only 5%. And I've mentioned many times already, half of the Vietnam economy growth is attributed to export. But among the export enterprises, you'll see that there is not much positive impacts on employment in the export sector. Workers in the export sectors have low income, they don't have enough social protection. So we should have a rethink. In the first sharing, we can see that Vietnam is a big country. Mr. Jonathan Pincus knows this very well, and we have a big population as well. Now, given such a big market, do we have to export at all cost? Now, given our position in the value chain, we may gain some economic benefits when exporting, but apparently the benefits in terms of improving the living standards of the export workers are moderate. I would like to apologize for dragging on too long. I will be more concise in the next topic. So given the adverse impacts on the workers, let's talk about what the impacts will be in the upcoming years. Well, given my research and my monitoring observations of the local and international markets, these are only the early phase. Now, the Vietnamese government have been very responsive and timely in COVID-19. And during the recovery process, Melissa has already issued a program to support the recovery process. However, given the relevant forecasts and projections, we can see that if we don't provide appropriate support measures, then the labor market will further deteriorate, and it's reflected in the following signs. So now, given recoveries everywhere, and Mr. Viet from Government 10 mentioned that the income of workers has increased. However, the global trend is that they are shedding labor costs, while salary, social protection, social welfare, labor costs, etc. So this trend will persist until enterprises can fully recover and grow further. Whether the impacts will be shorter or longer, it depends on many other impacts as well. Secondly, speaking of the impacts from COVID-19, what we haven't done well, we have been talking about what we haven't done well, right? But COVID-19 has opened up new horizons for us. And the trends adopted among the enterprises is that they will embrace a digital transformation process. They will change the governance structure, and this will have a very strong impact on the labor market. And many UNDP and the ILO studies have pointed out that the low-skilled workers and the workers performing repetitive jobs may face a greater risk of losing their jobs or reduced employment. And a third group undergoing drastic changes, they have not received due attention. And in the recent recovery support program, while we have not been mindful enough of the new forms of jobs, including green jobs, circular jobs, remote jobs, and part-time jobs, online jobs, platform jobs, etc. This new form of jobs have created a lot of different triggers, and now COVID-19 has led to job loss in many different markets, and while maximum we have 60% of the workers returning to their previous jobs. And there is also an issue of labor market policies in response to the new forms of jobs and the new forms of industrial relations. In Vietnam, we have just started thinking about this, and if we are persistent with the old mindset of regulating labor market, it will make it more difficult to workers. And another question is how to help our workers adapt to the new normal, to the new conditions. There are three new trends. The first one is that for workers in those sectors strongly affected by COVID-19, which cannot or do not want to recover in the old past, they will need to find new directions. And secondly, there are workers in the sectors where there is a need to upskill, so that they will need to go through a lot of training. And the third group of workers are those which will need to have higher value-added jobs, etc., and they need to be supported by policies. We have three different groups of workers here, and our policies will need to be targeted to each of these groups as well. So apparently, we may have fancy policies. We may think that we have all-rounded measures, but we have not hit the right audience. So speaking of labor market policies, well, there have been quite a few conclusions, and I hope that Vietnam can travel in that direction. Most fundamentally, I think our policy system will need to contribute to upgrading the labor market. By upgrading the labor market, I believe that, well, firstly, COVID-19 has pointed out that we have too few proactive labor market policies, including lending or credit policies or insurance, etc. We apparently have focused on two categories of audience, the poor, the disadvantaged, etc. That is what Vietnam is doing well. They are the lower group in the labor market, right? And then another group is the formal workers that we have supported, but about more than 50% of the Vietnamese workers are informal workers. Right, they have been there forever, but our policies have not focused on them. So, well, I have yelled out in many forums already that we have to have the right definition of informal workers. Whether you call them formal or informal, the labor market has changed a lot, and we need to care about providing protection to them. So given COVID-19 and the recent changes, countries and especially developing countries have realized that we have too few labor market policies, and the policies don't ensure fairness and equality among the workers. Apparently only the formal workers received incentives and support from the recovery support measures. And apparently the informal workers have fallen out of the cracks. So the market has realized this inequality. And thirdly, I think this is what Vietnam can do, and we are changing rapidly. That is our labor market management system, and there are a few issues here. So firstly, we have focused too much on policy and the consistency of policies from the top-down level. We have not factored in the regional or provincial differences like Ho Chi Minh City versus Lai Châu province, for example. And the grassroots level is too weak. Apparently, we have depended on the policy issue up high, passing on to the lower levels. And COVID-19 has highlighted the weakness that we lack the information to manage the labor market, and we don't have data and evidence for policy making. We don't know whether our policies reach the right audience. We don't have an inventory of our workers and their needs, and we have got no measures to evaluate the policy impacts. What are the consequences? We can see that very clearly, right? First of all, there is an issue of abuse and moral hazard. Secondly, we fail to reach those who really need support. And thirdly, there has been a situation of inequality in the labor market. So in the coming time, I believe that we have to do a few things in the labor market. First of all, we need to increase equality. Secondly, we need to have better coverage. And thirdly, we need to reform the labor market policy systems, strengthen the role of the grassroots levels with more diversification. While up high, the government and state can ensure inclusiveness and comprehensiveness. And then at the provincial and business enterprise level, they should all have a role to play. And secondly, labor market policies. The world has pointed out that we need to focus on a few directions. First of all, we have a skill shift. We should embrace in a skill shift. In Vietnam, while the share of agricultural skill is now down to 29 to 30%, China has set out a target to reduce the share of agricultural labor to under 10%. Now, so as a developing country, we should reduce the share of agricultural labor. And in the recent time, we have slowly withdrawing workers out of agricultural sector. But now we have only 26 to 27% of the workers in the total labor force being trained. So we have to increase this share. And please give me a few more minutes. I don't have too many opportunities to speak in forums like this. So a few more minutes for me, please. I have a background of a labor economist, and I have worked for my entire life in ILSA and Molisa, but apparently up until now, even in my retirement, I have realized that there are so many issues with the labor market. So we should offer protection to all workers. The ILO has proposed a concept called social protection floor, right? And we mentioned times and times again the slogan of leaving no one behind. But in order to do this, we should focus on lifting up those who are being left behind. Otherwise, the slogan of leaving no one behind will forever be on the shelf. Well, we may focus too much on helping the poor, but for the missing middle, they are creating a lot of productivity as well, right? But we are leaving them behind. So we need to adopt measures to lift them up. And to do so, we need to have a minimum floor to protect everyone. And for example, with social insurance coverage rate, now we can cover only 26 to 27% of the labor force. And 45% of those above 60 years old have no pension. We have proposed social pension policies, but it's about $10, actually $15 for a month, and it's not enough for people to live on. Another thing, another characteristic of the existing labor market, I don't know what expression to use, but I think things have been done, but we have to be more drastic. We have to democratize the labor market with stronger union representation in order to really protect workers. And now the labor law has allowed for other union organizations apart from VGCL, the Vietnam General Confederation of Labor, but the other union organizations, I think they have to appear more quickly and growing faster. And let's not be too vague, too half-hearted as we are now. Okay, thank you very much, Ms. Lan Huong, for your sharing. Very insightful. And we've invited you here to talk about labor and employment. So you are the right speaker to invite here. So given your sharing, we can see that there are many inherent issues in the Vietnamese labor market to be addressed in the coming time. For example, how to support labor market recovery following COVID-19. There has been very slow recovery in the formal sector. And secondly, the government needs to do more to upgrade labor market policies, and we should have a more targeted policy approach to make sure that the policies are implemented to the right audience. And given your sharing, we can see that, well, firstly, the government needs to focus on the formalization of the informal sector in order to support the informal workers. We need more suitable policies. And secondly, COVID-19 has pointed to us that we have too high concentration of industrial zones and processing zones in only a few provinces. And given the development of COVID-19, there was a massive withdrawal of workers from those provinces to the rural areas, and it is very difficult to reverse this trend. So maybe in the coming time, the government need to have better policies to have a more even distribution of industrial zones and processing zones in different provinces. For example, I can quote a mountainous and midland province in the northern areas. We have very strong growth in Bắc Giang province, and they have attracted workers not only within Bắc Giang and from other provinces as well. So speaking of policy solutions, I really hope that the research team can take note of these comments, and you should utilize the inputs from Ms. Lan Huang more in order to have better policies in the coming time. And regarding the economic recovery support program, now the government has tried to adopt a targeted approach in supporting the labor market. Obviously, there have been limitations, but given your sharing, we can see that there are bottlenecks, and we are trying to unlock them in order to better support the labor market. Thank you very much. Maybe one more point, please. So what I really hope for is that the ILO, the UNDP, and given the presence of other organizations and domestic agencies here, well, I think we should be careful not to use the difference between informal and formal sector. Well, for Vietnam over the last many years, we have got about 50% of the informal sectors, like, for example, farmers. They need to participate in the voluntary social insurance system. They don't get anything from the government. And looking into the different systems of labor market policies, what is being done by Melissa, now we focused on vertical sectors only. Now, the labor market is different. It's not only verticals. We may have a student having a side job as a Grab driver, and in the evening, he may be an online merchant, right? So different forms of jobs. So probably we should design market policies to target at different classes of workers, and the government should ensure to have a minimum social protection floor to ensure inclusiveness. A third point I would like to mention is that in policy making, we should be mindful of those who are being left behind. For example, we have 99% of the population which have finished primary education, right? For the 1%, we should be mindful of supporting them. And this should be the job of the education sector and social security sector as well. Yep. So the slogan is one thing, but on the other hand, we should engage in real actions. And Mr. Khoi and other speakers and all of you, we have mentioned that no one should be left behind. But now we have plenty of people being left behind. Okay, thank you very much, Mr. Huang. You have, Ms. Huang, you have hit the nail on the head. So probably, given the presence of the ILO, other international organizations, and foreign embassies, we hope that we can all look into Ms. Huang's inputs in order to help the labor market in Vietnam grow better in the future. And ladies and gentlemen, we have two more very important speakers. We are going to talk about medium-term growth. Speaking of labor and employment as well, now I would like to introduce to you, and I'd like to invite Ms. Đặng Thị Thu Hoài, an expert on the labor affairs. So we hope to hear from you about how to improve labor productivity to support medium-term growth in Vietnam. I have a few questions. So productivity is a economic growth driver, especially in the medium and longer term. What has been notable in productivity growth in the past few years, especially in industry? And is productivity an economic driver in the recent time? That is the first question. Now the second question. So our study is a little bit different from other studies. Now at the moment, state-owned enterprises in general, especially the state-owned enterprises in the 8 core industries often have the highest productivity. Is that strange? And reality has shown that given the equitization process, now labor productivity growth has been attributed to mostly the private enterprises. And what policies should the government adopt to better support labor productivity growth among the domestic enterprises? And we have also seen that the labor productivity fastest growth rate has been experienced with the smaller private enterprises. Well, they may have a very low start, but their productivity is high. So what support policies should be provided by the government? Thirdly, what will be the factors supporting or hindering labor productivity in the coming time by sector and for the entire economy? Well, thank you very much, Mr. Hoi, for your very interesting questions. So, ladies and gentlemen, as Mr. Hoi mentioned just now, labor productivity is among the factors to ensure sustainable economic growth in the medium term and longer term. However, given the issues of current affairs, as Ms. Huang, who has emptied her hat just now, and also, given what we have heard from Mr. Viet of Garmentan Corporation, labor productivity is closely associated with labor employment, welfare for the workers, the number of jobs that could be created, and competitiveness of enterprises. Only by and with labor productivity growth, can enterprises pay more to their workers? Can the enterprises become more competitive against their peers? So apart from contributing to longer-term economic growth, labor productivity is closely associated with many of our headaches at the moment. So we have conducted a study recently. In the past 5 years, we have seen that while the current inherent labor and export issues and the issues faced by the business community are all predictable. It is because of the several characteristics in our labor productivity roadmap in the recently. So we have heard from National Assembly discussion, a very vibrant discussion regarding one indicator that we did not achieve this year, that is about labor productivity. Many National Assembly deputies have asked why our economic growth rate has been high, but we have failed to achieve the target set out for labor productivity. And as Ms. Huang mentioned just now, during the COVID years, we suffer from significant employment reduction. And even in our phases of relative recovery, we have got some regain of employment. However, labor productivity growth has been, well, at a maximum of 4.7 to 5.2, 4.7%, and it's below the target of 5%. And while given the multiple challenges that enterprises are facing in terms of fundraising, in terms of market, now it is understandable why labor productivity has been below the target. And in the coming time, if we don't provide appropriate measures to support labor productivity growth, it will be very difficult for us to achieve our GDP growth rate, let alone workers' welfare or enterprises' growth. So labor productivity is very important. Another thing regarding the characteristics of the recent labor productivity trends. Firstly, in the pre-COVID periods, we experienced some labor productivity growth recovery, and labor productivity growth rate was higher during period 2015-2019. about close to 6% compared to the 4.7% in the previous period. That has been attributed to the agility of enterprises' investment in market expansion. And most importantly, we have heard from Mr. Jonathan Pinker's presentation that is about the role of export. In our study in the last 5 years, we have seen that export has a significant positive impact on labor productivity growth. And that finding was also prominent in the previous periods, back in the 1990s into 2010s, and between 2011 and 2015. The role of labor productivity growth, actually the role of export growth in promoting labor productivity growth has been quite clear. And what I would like to emphasize here is the role of processing and manufacturing industry labor productivity growth versus that of the entire economy. The former has been declining relatively regarding that of the latter. So manufacturing labor productivity used to be 1.2, that of the entire economy. Now that 1.2 has been down to 1.09. And if the declining trend for manufacturing labor productivity is declining, then the share of manufacturing to the entire economy growth will decline as well. Our study shows that if we continue to grow our manufacturing or export manufacturing industry in the current format, so mostly we focus on processing or participate in the different links of the supply chain where we are both dependent on importing input materials and external markets, then export will not have too much of an impact on labor productivity growth in the coming time. So we have seen in Mr. Jonathan Pinker's presentation that we should be responding to the changing market trends and demands. And let's look out for where stronger demands are and switch our manufacturing towards that direction. Secondly, our study has pointed out that we should try to upgrade ourselves to the higher links in the value chain. Mr. Viet's sharing is that Garment 10 Corporation has been very lucky, but I think it's not just purely luck. It's been attributed to probably Garment 10 productivity in adopting and transforming their technologies and switching away from the traditional links to the higher value-added links, and that can promote productivity growth in the coming time. Another key point we've seen from the previous speaker's presentation is the role of FDI in promoting labor productivity growth, and our study shows that there is a gap, and this is in response to the second question of Mr. Hui, there is a gap of labor productivity growth between FDI enterprises and domestic enterprises. We have pointed out to the gap between 1.2 to 1.6 times, and Mr. Hui mentioned that factors include that we have mostly small and medium enterprises which are weak in financial resources, human capital and technologies. So given those weaknesses and limitations, it is very difficult for our domestic enterprises to connect with FDI enterprises and penetrate global value chains and participate in the export sector in order to gain labor productivity growth. And also they are too weak to improve their technologies and maybe tap into the higher links of the value chain and market. So they are the limitations of our domestic enterprises, and that is why we really need support the government. Actually, the government has provided quite a lot of support policies. We even have a law on SME development, and there are different policies to support domestic enterprises, regardless of them being private enterprises or those experiencing issues with labor and employment. But we need to make these policies more effective. We need to make sure that they are delivered to the right audience and that they can genuinely help to improve the worker skills and to upgrade the technology capacity and financial capacity of the enterprises. So we need to change in order to improve the effectiveness of government support policies. It responds to Mr. Hoy's third question regarding what to do in the coming time about how labor productivity will be. So it entirely depends on whether we can seize the opportunities and whether we can overcome the existing challenges in terms of labor productivity. And regarding the opportunities in the previous presentations, other speakers have mentioned this already. So there is a lot to do with seizing the opportunities, the digital economy, which may have a significant impact on economic growth. Our study shows that digital transformation can help increase the labor productivity. Depending on the sectors, it can range from between 16 to 50% labor productivity growth. So we need to issue appropriate policies to promote digital transformation and to help enterprises utilize I 4.0. And well, it is quite clear that the government can have a very important role to play. There are bottlenecks in improving labor productivity that have not been unlocked. For example, Ms. Huang mentioned human capital bottlenecks and the need for industry structure and occupation structural shift. And secondly, we need to promote connection as well. As Mr. Hoy mentioned before, why there is a high concentration of industrial zones and processing zones only in large provinces. Why is there a lack of those larger provinces and those smaller nearing provinces? Probably we lack connectivity, we lack transport infrastructure, and that is why we could not attract investment into the further away provinces yet. So that is why the government has a very important role in investing in infrastructure to promote connectivity with the smaller provinces. Another thing very important is investment for market development. Let's not talk about technology markets or land market. Let's talk about the labor market. Ms. Huang mentioned already that the government has a very important role to play in developing this market. The key word here is that we need to be more dynamic in order to seize the opportunities, in order to adapt to the very rapid changes in many markets now, given the high level of uncertainties, which cannot be pre-anticipated. So we have to be dynamic, we have to be agile. These are the very important factors to make sure that we can improve labor productivity in the future in order to realize SDGs goals. Thank you very much, Ms. Huai. So very interesting findings. Thank you very much for proposing certain policy options to unlock the bottlenecks of Vietnam for labor productivity growth in the coming time. Ladies and gentlemen, so given other studies that we have, I totally agree with the findings mentioned by Ms. Huai. First question is why manufacturing labor productivity has been declining relative to the overall economy labor productivity. Improvements have been made. However, Vietnam is now ranking close to the bottom of global ranking. Secondly, the manufacturing industry productivity growth has been attributed to the increase in the number of workers. However, given Ms. Huang sharing, COVID-19 has led to a reduction in the number of jobs in the manufacturing industry. Another thing is that speaking of the economic structure, well, the FDI sector has been expanding on the breadth. and labor productivity contribution to added value is quite low, and we are focused mostly on the number of workers. So probably the government need to have better and more suitable policies to address this in the coming time. Another thing is that speaking of the contribution of labor productivity to value added, we have 8 key industries, and 6 of those are expanding on the breadth. And maybe they will shift to expanding of depth, and this is attributable to technology, right? But technology component contribution in this industry has been very limited. And Ms. White mentioned the need to utilize I 4.0. Well, according to international organizations' estimate, by 2030, I 4.0 can help Vietnam's GDP increase by 30% if we can utilize this well, especially for innovation, for smart agriculture, etc. And well, if we can change the governance and management of enterprises, we can improve productivity, and we may change production methods and apply I 4.0. This can create a new revolution in labor productivity growth and economic growth. Now, so we've discussed the first topic on medium-term growth rate. Now, next, similar to the story of productivity, let's talk about the demand for energy, especially clean energy. That is an issue of current affair of Vietnam. Vietnam is now about to issue PDP 8. Speaking of the generation sources and clean energy, it is a very big issue, and I would like to dedicate this question to Ms. Virginia Foot. The first question is that in the last decades, Vietnam experienced annual GDP growth on average of 7%. Given that growth rate, we have experienced a considerable increase in energy demand and GHG or carbon emission. Now, given the commitment of the Prime Minister of Vietnam in COP26 to have net zero by 2050, what do you think? Can Vietnam achieve both net zero and high growth rate, and what do we need to do to achieve this dual goal? That is the first question. The second question is, what are the major challenges faced by foreign investors when investing in Vietnam? And according to you, can Vietnam compete against other regional countries in attracting investment in clean energy? The third question, well, in the short term, do you think that COVID-19 and other macroeconomic impacts faced by Vietnam will be barriers to the transition to clean energy and renewables, especially from the perspective of fundraising and investment?
Thank you all. This sort of fills out, I think, some of the topics that we've been discussing so far today, so thank you for having me. I want to start with what the Prime Minister talked about at the COP26, in that all countries went to 26, 27 is a bit different, but to 26, to make their commitments for carbon emissions by 2050. And Vietnam made a very bold commitment. The committee that I'm on, the FDI community, the foreign business community, and the domestic business community have all been working very hard on PDP 8. For two reasons. One is to figure out how does Vietnam reach those goals on paper. This is a plan. But how do you assess the growth in the need for power with the need to reach the commitments that the Prime Minister made at COP26? But the second reason, and in the short run, the far more important reason, is Vietnam does not have enough renewable energy. Companies do not have access to renewable energy. The air quality in Vietnam, we all know, is not good. The sustainability of the path that Vietnam has been on in terms of energy is not good. So we've been trying to look at what is the balance of the energy mix right now. It's about a third hydro, about a third coal, maybe more than a third coal. There is offshore gas that has been developed. There's more offshore gas that could be developed. And then there is, in the last couple of years, there has been the investment in renewable energy. The problem for the last 2 years on renewable energy is that much of it is not being used. So there was a tariff set, there were projects licensed, but many of them have never come online, or there is no transmission line to bring the power that they generate to the markets where it's necessary. So the complexity of an energy mix system is extreme, and the complexity has not been figured out yet. So the current Power Development Plan 8 focuses on coal for the first 5 years, the first 8 years. There's little to no renewable energy in the power plan right now. There's very little growth available for hydro. There's some ability to develop the offshore gas reserves that have been certified in the Gulf of Thailand and off the coast from basically the Da Nang area. But mostly the growth in energy for Vietnam in the plan now is still coal. And I think there are several problems with that. There are the obvious problems of air quality. The residue of coal is intensive, so it's a land problem, it's an air problem, it's a shipping problem. Right now, coal has to be imported. Vietnam has pretty much used its coal reserves. Coal prices are high globally. So the economics of it, the sustainability of it, and it's a long-term investment. You invest in coal for 30 years. You don't invest in coal for 5 years and then switch out of it. So it's a real issue for Vietnam. And the happening at the same time globally is there is less and less financing available for coal. So the number of countries and agencies that will help Vietnam finance its coal plants, new coal plants, is very minimal. So you need to figure out, okay, even if we want to do a few more coal plants, who's going to finance them? Whereas globally now, there is far more financing available for gas to some extent, but also wind, solar, battery, transmission, and other forms of clean energy. And I think Vietnam could really tap into global money for clean energy. It's competitive because every country is racing to improve their carbon footprint, both for their own citizens, but for their global commitments. But there is money that keeps coming and looking at Vietnam, and then it goes away because Vietnam's not ready. And that's where we really have to get the regulatory system set up to grab that global money and invest it in Vietnam. The other area that is difficult, and that you mentioned in the introduction, the growth of Vietnam's economy, the GDP growth, is often compared with the growth in the use of electricity. But Vietnam is, I'm sorry to say, one of the least efficient users of electricity, which said in the opposite way, it's one of the highest wasters of electricity globally, particularly in the region. So that is an asset that we are throwing out the window. And we need to treat electricity as a precious resource. We need to conserve it. We need to use it carefully. We need to price it properly. We need regulatory, the push to force both we as consumers, manufacturers, building, construction, the cars we drive, the motorbikes we drive. There needs to be a regulatory push towards efficiency. You cannot build coal, gas, renewables. If we keep wasting energy the way we are now, we are going to have to build and build and build and build new energy sources. So we need to have the path for building, which we need, but we can right away find the path for energy efficiency and the reduction of waste. The other area that I think is very important in the short run is that it's difficult, if not impossible, to project where technology is going in battery, renewable, transmission. So to build a plan that has projects that are 30 years cuts you off from the access to new innovations that are coming every day, batteries being probably the most important example. And so we don't want to put a lot of capital into energy plants, coal in particular, that are then locked in. You can't just, the payout for a coal plant requires a 25 or 30-year run. So you'll be bankrupting the investor if you say 5 years later, oh, never mind, we're going to batteries now. So we need to really plan the next 5 years extremely carefully to not have assets stranded while innovation is going on globally. I would also say there's so much to be learned from other countries. Vietnam does not have to run these experiments itself. Different countries have done it different ways, have integrated renewables into an energy mix. But there's very little mystery left. The regulatory environment, how other countries have been successful. We just need to pick which ones we like, bring them in, get the regulatory regime, and get going. Transmission is a crucial piece in this, and right now Vietnam's transmission is controlled by the state for national security reasons. And that makes some sense, but it doesn't make sense overall. You can have transmission lines that are in the high voltage that are not vulnerable to merely shutting them down because the owner isn't getting paid or the wheeling fee is too low. Or Vietnam does not have to be vulnerable by welcoming FDI or domestic investment into transmission. Other countries have done this. There are many models, and it's a very important one to look at. In terms of the other question about FDI, the other reason that I think the PDP-8 long look is important, but the short look is crucial, is because the foreign companies and increasingly Vietnam's exports are being looked at in terms of a carbon footprint. So the EU is looking at this, consumers are looking at this, products are getting graded in terms of a carbon footprint. And so investors are looking at Vietnam in terms of how can I get access to renewable energy? And I need it now. It's not good enough to say Vietnam's carbon footprint will be 0 in 2050. It's now. If I'm going to expand my manufacturing of apparel or phone equipment or anything, they need to show headquarters, they need to show their buyers, they need to show the global community that they have a reduced carbon footprint. And that has affected some investors who have come to look at Vietnam, and they've left because they cannot see a clear path to access to renewable energy. So it's a draw as well as a requirement for additional FDI. And we talk about FDI because they have a global headquarters somewhere who says, what's your carbon footprint in this investment you're proposing in Vietnam? But it's going to affect everybody. Any product made in Vietnam, whether it's FDI or Garment 10, they're all going to have to be able to talk about what their carbon footprint is. And so it's something that all companies growing and investing and expanding and manufacturing in Vietnam, they're going to increasingly be able to be needing to show their ability to manufacture in a sustainable way. And I wanted to loop in the issue a little more broadly as well, in that the environment in Vietnam more broadly, so water, plastic, the environment at the provincial level is also increasingly important. We see and hear foreign investors talk about, well, Vietnam is not that clean, I don't want my kids growing up here, or I'll come, but my family is going to live somewhere else. The global cleanup in many countries has moved quite quickly. So if you look at the old numbers, and I will speak for the United States, the numbers in some of our major cities were horrendous. We had rivers that caught on fire. We had what we called acid rain, but just filth coming out of the skies with snow and rain. Many of those cities that were famous for that are now, you look at the air quality index, they're green day after day after day. So it's doable, and it's really happening globally. It's not yet happening in Vietnam. Vietnam is still going in the wrong direction. And that has a reputational issue, it has an enthusiasm issue, it makes people say, has Vietnam figured this out yet? The answer is no, Vietnam has not figured this out yet, but it can. These are a lot of countries. India is obviously not in a good shape either, but many of your neighbors have sort of crossed over into a cleaner development without sacrificing development, without sacrificing growth. And in fact, there are tremendous number, if you look at job creation based on renewables and based on going clean, the job growth is substantial. You need the training, you need the sort of upscaling, as we've talked about, of labor, but the job growth is tremendous in rooftop, in wind, in building transmission, in cleaning up the rivers, in recycling plastics, and on and on and on and on. So there's no reason to see or to define clean is negative in growth, negative in job creation, and is a negative to the economy after overall. In fact, going clean is good for the economy and good for all of the citizens and all of us here today. So thank you.
Vâng, xin cảm ơn bà Fox đã đưa
much, Ms. Virginia Food, for your very realistic viewpoints regarding development of the clean energy market in Vietnam. You have also provided warnings that we should not keep investing in coal power plants. You've mentioned the importance of regulatory framework and investment in the transmission infrastructure, and also the battery technologies to support clean energy in Vietnam. You have also mentioned the smart consumption trends in the US and in developed countries. They want clean and green products. And also foreign investors in Vietnam, they look into the possibility of access to clean energy in Vietnam before making the important investment decisions. They are all very important inputs for Vietnam. So Ms. Virginia Foot, now the Politburo of Vietnam, has developed and issued 6 resolutions of the Politburo regarding socio-economic development for 6 regions, and based on that, 63 provinces will develop their development plans. And we emphasize the importance of green and circular economy, including going clean and green. So this is the direction of the Party and State of Vietnam for renewables. So I believe that with the high-level instruments, by 2050, we can certainly achieve net zero. And your point is that we should not wait until the end of 2050 to have net zero, and we should go green and clean now in order to attract foreign investment. And an interesting finding is that economic growth is accompanied by energy consumption. And recently, we have very high economic growth but declining energy consumption. We wonder why. And we have found out that there has been significant private renewable development. So they produce renewable energy for their own consumption. That is why the demand for the grid energy has declined. And the issue now that we are facing is energy storage, and you have mentioned energy storage batteries. So the future trend is that we will invest more in storage batteries so that we can store energy to support energy demand of the overall economy. So just now we have heard from 5 speakers regarding the current affairs of today. So first of all, I would like to thank our 5 panelists for your concise and insightful remarks. And they are important contributions to the policy making of Vietnam. And we have representatives from the Working Group 1317 of Vietnam, and we will look into your inputs very seriously in order to provide recommendations to our government. So ladies and gentlemen, we have gone over time a little bit, and we still see a lot of enthusiasm from our speakers and panelists. We want to hear more from you. Actually, maybe we can have another forum to hear more from you and your enthusiasm. In order to help the Vietnamese economy grow further in the short, medium, and longer term. And if the time is still there, then we'd like to ask for 2 input from the floor, and we would like to have all of you to contribute to our forum. Thank you very much. Okay, so we have many faces here, including senior researchers and analysts. And you have provided input to the Government Advisory Council. We have Dr. Lê Đăng Doanh, a great name. Previously, he was the former director of CIEM MPI. So, Dr. Lê Đăng Doanh, please. I'd like to thank Mr. Hoi to invite me to speak. I'd like to thank the 5 speakers. What I want to say is that I totally welcome the remarks that you have shared. So definitely we should deep dive further into our digital transformation process. We should look into the digital economy, circular economy, and green economy. If we cannot do this, we will not be able to integrate into the global economy, and we will not be able to connect to value chains. A second point I'd like to make is that in order to do this, we need to strengthen our institutional reform process. Well, maybe there are many things that we cannot do, but what we can do is to promote transparency. We should make transparent business operations, government activities, and we should transform drastically to an e-government platforms with stronger engagement and roles of citizens and the NGOs communities. They should be allowed to make important contributions to promoting national development. Thank you very much. Your remark, Dr. Lê Đăng Doanh. We are receptive of your remark, and in the coming time, we will organize even more in-depth forums regarding enterprise digital transformation, and we hope to have your inputs then as well. Another remark, please. Well, another expert from the floor. And we hope to hear from you, not only in response to session 2, but session 1 as well. Okay, so I have actually targeted Mr. Thang. So Mr. Võ Trí Thang is among the very important members of different councils to advise the government on policy making. Dr. Võ Trí Thang was also former director of CIEM. And well, if I don't remember wrongly, he's a senior expert of the National Committee for Asia Pacific Economic Cooperation. Yep, and also a member of the Green Economy Committee. Yep, so we'd like to have some sharing from you. Actually, the time is up. I have just attended a sideline meeting of APEC. Well, I think the topic of APEC Forum this year is very meaningful. So we look at our situation from an economic and political perspective in a highly uncertain world with many unpredictable variables. Yep. So I'd like to emphasize the openness, connection, and balance, 3 words. And I think that, well, this is a case not only for Vietnam, but all other countries. We should be mindful of these 3 factors, and we should take actions from the perspective of the individual, the enterprise, and the government. And obviously, for Vietnam, well, we should think hard about these 3 words. That's all for me. Thank you very much. Okay, thank you very much, Dr. Võ Trí Thang, for your suggestion. Thank you very much for speaking up in this forum, and I hope that in the upcoming forums of NCIF in collaboration with UNDP and other organizations, we hope to have your presence and your inputs. And ladies and gentlemen, so we have got more than 3 hours for session 1 and session 2. Session 2 has been a little bit long. Well, but I still really want to hear more from our panelists. And given your presence here, you still remain with us until 12:30, and we have a room full of faces that shows how successful our forum has been. And I think the forum has been organized in a very timely manner. So we'd like to thank all of you for your attention and for remaining with us until this moment. So speaking of the 5 topics for session 2, 4 presentations in the morning, we have discussed extensively the global economy, the global headwinds, and the monetary policies, conflicts between Russia and Ukraine, and slowed economic growth of China with significant impacts on the global economic situations and that of Vietnam as well. We've talked about exchange rate, interest rate, balance of payment, FDI, etc. In the upcoming years, we should be more cautious with further interest rate hikes. Totally agree with that. And also, we have heard directly from a major corporation in Vietnam, Government 10, regarding the current situation, the challenges in the upcoming time, and the need for support from the government. So I think for Government and Corporation in particular and the government sector of Vietnam in general, I hope that we can sail into the headwinds we've heard from many challenges at the moment. Looking at Ms. Huong's face, I can really realize how many points that she would like to recommend regarding the bottlenecks. And thank you very much for your recommendations for policy making. And we've also mentioned the two important drivers for medium term and longer term. We've spoken of labor productivity growth and the need for clean and green energy. I would like to thank Ms. Virginia Foot for your important policy recommendations for Vietnam. And it is not just that we are going to realize the net zero commitment, but well, even from now, we need to implement carbon reduction policies in order to attract foreign investors and to satisfy the preference of global consumers for clean energy. And I would like to thank our audience from the floor for your important insights. So we will take note of all of these inputs for advising our policymakers. And I'd like to take this occasion to thank UNDP for organizing a very successful forum. I would like to declare the closing of session 2. And I'd like to pass the floor back to the MC. Thank you very much, ladies and gentlemen. Thank you very much for your inputs.